is you'll have 5 minutes for opening statements. For all senators, the 5-minute clock still applies for your questions. At 30 seconds remaining for statements and questions, you'll hear a bell ring to remind you that your time is almost expired. It will ring again when your time has expired. If there's a technology issue, we'll move to the next witness or senator until it is resolved. To simplify the speaking order process, Ranking Member Toomey and I have agreed to go by seniority for this hearing. Today, we consider the nominations of two distinguished public servants, Rohit Chopra to serve as Director of the Consumer Financial Protection Bureau, and Gary Gensler to serve as Chair of the Securities and Exchange Commission. Most of us have met with them. Most of us have been impressed with their knowledge, their commitment, their passion to serve, especially during the current public health crisis. Thank you, Commissioner Chopra. Thank you, Mr. Gensler, for your willingness to serve. You're both nominated to lead parts of our government whose job it is to stand up for the millions of Americans who don't have a corporate lobbyist, who don't have a super PAC, who never get bailouts or golden parachutes. And you'll take on these roles at a time when so many people don't feel like they have a voice in our economy or anyone on their side in our government. Your job will be to prove them wrong, to fight for all the workers and families and communities and small businesses that have been left out and looked down on by the Washington elite and have been preyed on by Wall Street. Even before the pandemic, workers' wages were not keeping up with the cost of living and raising a family. The cost of housing and childcare and prescription drugs all have gone up. We know 40%, a stunning statistic, 40% of Americans are not able to come up with $400 in an emergency. The racial wealth gap has increased. The average white family now has 10 times the wealth of the average Black family. And most stunningly, we have the widest racial home ownership gap in 50 years. In fact, the gap is as big today as it was when it was legal to refuse to sell someone a home because of the color of their skin. Then the coronavirus pandemic hit. Millions of Americans who were one emergency away from draining their savings or turning to a payday lender or being evicted were all facing emergencies at once. Millions of homeowners are behind on their mortgage, the risk of foreclosure, including nearly 1 in 6 Latino homeowners and 1 in 5 Black homeowners. Today's nominees understand the challenges we face after years of allies of the largest corporations and the biggest banks running these agencies and setting government up to fail. Mr. Chopra and Mr. Gensler are here to fight for everyone else. Congress created the Consumer Protection Bureau to be a voice for all Americans who too often don't have a voice in Washington. During its first 10 years, the CFPB delivered results, made new strong rules that protect consumers from abusive practices, returned more than $12 billion to more than 29 million Americans who were cheated and preyed on by shady lenders and sometimes by big banks. Mr. Chopra has the expertise and the track record to lead the Bureau at a time when workers and their families are desperate for someone to look out for them. He has a deep understanding of financial markets, a strong record of protecting consumers and small businesses, promoting competitive markets, holding bad actors accountable. 2018, the Senate voted unanimously to confirm Mr. Chopra as an FTC commissioner. Since then, he's worked with members of both parties on a wide array of issues important to American consumers. As commissioner, he worked with Democratic and Republican state attorneys general, something Mr. Bloomberg used to be before coming to the Senate, to protect American small businesses and consumers from foreign goods that were flooding the market with fake made in the USA labels. He's pushed the FTC to crack down on big tech, including authorizing the agency's current lawsuit against Facebook. He's earned the endorsements of veterans and military organizations because of his long record of standing up for service members, veterans, and military families that have been preyed on by Wall Street banks and predatory lenders. The CFPB, Mr. Chopra, served as the agency's first student loan ombudsman, directing the agency's work in the $1.7 trillion student loan market and working with state attorneys general of both parties to bring enforcement actions. With Mr. Chopra leading CFPB, Americans can be confident they'll have someone looking out for them. Turning to Mr. Gensler, we consider his nomination at a time when it's become more and more obvious to most people that the stock market is detached from the reality of their lives. People have watched stock prices go up and up during this pandemic, even though only half of U.S. households have stock investments. They've seen corporations pay dividends to shareholders while rolling back hazard pay for workers and laying people off. as the chair of the CFTC. Prior to that, as a senior official at Treasury, Mr. Gensler delivered results. He ensured accountability. That's why he's been nominated for this job. He led the charge in 2012 to crack down on the big banks that have manipulated interest rates and gotten away with it. He'll bring that same focus to the SEC. Markets should be a way for families to save and invest for their kids' education or a down payment on a home or secure retirement, not a game for hedge fund managers that workers seem to always lose. Mr. Gensler will bring back to the focus back to the people who make this country work. Will take on anyone on Wall Street looking to game the system. It means upgrading climate risk disclosure requirements that are out of date. It means punishing misconduct. It means enforcing the protections on the books. It means working with other agencies to head off growing problems before they become emergencies that hurt the economy. We've seen what happens when markets don't have real safeguards. People are left to fend for themselves. Just look at the electricity market in Texas. Ultimately, both of these roles are about one question: whose side are you on? I'm confident both nominees will stand up for all workers and their families who haven't had that voice. I look forward to hearing how each of you will help chart the course out of this pandemic and build a brighter future for our country in the years ahead. Senator Toomey.
Thank you, Mr. Chairman. Mr. Gensler and Commissioner Chopra, welcome to both of you. Thank you for your willingness to serve. You've been nominated to lead two agencies that can have a very substantial impact on the U.S. economy. After taking a devastating hit last spring, the U.S. economy is thankfully now in recovery mode. But there are any number of actions the federal government could take that would stifle this ongoing recovery. If federal agencies like the CFPB and the SEC were to impose burdensome and restrictive regulations, including, for instance, backdoor regulations by enforcement, well, that could limit consumers' access to credit, hamper job growth by limiting access to capital markets, and restrict the ability of publicly traded companies to act in the best interests of their owners, the shareholders. Any or all of these would impede economic growth. Today, I hope we're going to learn whether Mr. Gensler and Commissioner Chopra would take such actions as the heads of the SEC and the CFPB. Commissioner Chopra has been nominated to serve as director of the CFPB, and as we consider his nomination, I think it's important to remember the CFPB's history. It was created by our Democratic colleagues through the Dodd-Frank Act as arguably the most unaccountable agency in the history of the federal government. It's an agency with a single director who, until recently, even the President of the United States could not remove. That, of course, was deemed unconstitutional, and rightly so. But it's still not accountable to Congress through the appropriations process. Under President Obama, the CFPB pursued an activist, anti-business agenda that limited consumer choice, drove up the cost of credit, and hamstrung job creators through overregulation. The CFPB repeatedly engaged in overreach and abuse of its authorities. For example, it took a regulation by enforcement approach that the D.C. Circuit Court held violated the bedrock principles of due process. It routinely overstepped its jurisdiction, like investigating for-profit college accreditation, which the courts shut down. And it used public pressure tactics like to name and shame businesses, like publishing unverified consumer complaints. Now, based on Commissioner Chopra's record, I'm concerned about whether or not he'd return the CFPB to these hyperactive, often law-breaking, anti-business agency that it was under the Obama administration. And I say this because Commissioner Chopra helped set up the CFPB and then served as the agency's student loan ombudsman during the Obama administration. In that role, he was known to have a hostile relationship with many lenders and use name and shame tactics to pressure them. At the FTC, Commissioner Chopra has continued to take an aggressive anti-business stance. The Wall Street Journal editorial board has noted Commissioner Chopra, and I quote, has a record at the FTC and CFPB that suggests deep hostility to for-profit schools and other parts of the private economy, end quote. In one FTC case, 3 of his fellow commissioners publicly rebuked his dissent in a case for its, quote, disregard of facts and law and for making misleading claims and relying on fake assertions. Finally, we know that Commissioner Chopra favors unaccountable regulators with vast powers. He proposed creating one, a super agency that would regulate politicians and think tanks and nonprofits. So this raises concerns about how he would wield power at the CFPB. And I will remind my colleagues the CFPB remains led by a sole director, not accountable to Congress through the appropriation process. And as a sole director, there would be no other commissioners to potentially restrain that sole director. I hope today we'll hear some information will provide further insight into Commissioner Chopra's plans for the CFPB if he is confirmed. As for Mr. Gensler has been nominated to serve as chairman of the SEC. There's no question he has a great deal of knowledge about securities markets. The capital markets that the SEC regulates are the envy of the world and an important engine for economic growth and job creation. Facilitating capital formation will be particularly crucial to our current economic recovery. The SEC has historically administered the federal securities law on a bipartisan basis, but there are some who want the SEC to stray from its tradition of bipartisanship by using its regulatory powers to advance a liberal social and cultural agenda on issues ranging from climate change to racial inequality. Based on Mr. Gensler's record, I'm concerned that he may be inclined to use the SEC in this inappropriate manner. But security laws are not the appropriate vehicle to regulate the climate, nor to correct racial injustice, nor to intimidate companies regarding political spending. We have environmental, civil rights, and political spending laws to do that. At the CFTC, Mr. Gensler had a history of pushing the legal bounds of the agency's authority. One FTC rule on position limits was overturned in court. Another rule on cross-border swaps was viewed by critics, including international regulators, as exceeding the FTC's authority. So this raises questions about whether he will also push the legal bounds of the SEC's authorities, in particular, in an attempt to advance a liberal social agenda. I hope that today's hearing will provide further insight into Mr. Gensler's plans for the SEC if he's confirmed, and I look forward to hearing from both Commissioner Chopra and Mr. Gensler.
Thank you, Ranking Member Toomey. I'm pleased to welcome three of my colleagues, two of them visitors to the committee, Senators Cardin and Van Hollen, who will provide an introduction of Mr. Gensler, and Senator Blumenthal from Connecticut, who will provide an introduction of Mr. Chopra. Senator Cardin is the senior senator from Maryland, guest of this committee. You're recognized for your introduction of Mr. Gensler.
Well, Chairman Brown, Ranking Member Toomey, thank you for giving me the opportunity to introduce a fellow Marylander, Gary Gensler, to this committee for his nomination hearing to be chair of the SEC. On a personal note, I have known the Gensler family all my life. The Gensler family represents the best values of serving our community. Gary's commitment to public service is for all the right reasons. Government should work for everyone fairly. I'm proud to endorse his nomination to be the next chair of the SEC. He has broad experience for this critical position of oversight of a key part of our financial system. He has the experience in the executive branch, legislative branch, and private sector. It takes an aggressive, fair, and consumer-focused chair of the SEC at the helm to truly protect the interests of all Americans. It's with this important mission and responsibility in mind that brings me to Mr. Gensler. Mr. Gensler is uniquely equipped to serve in this role by his experience in the financial sector and academia and his commitment to public service. After serving in several roles at the Treasury Department, crafting policies on domestic finance in the 1990s and 2000s, Mr. Gensler was awarded Treasury's highest honor, the Alexander Hamilton Award, in recognition of his service. He is also no stranger to this committee, having served as senior advisor to former chair and Marylander Paul Sarbanes, and working to reform corporate responsibility, accounting, and securities laws as part of the Sarbanes-Oxley Act. Mr. Gensler went on to become one of the leading financial reformers in the wake of the Great Recession, serving as chair of the Commodity Futures Trading Commission under President Obama. During his time at the CFTC, he brought much needed oversight and transparency to future markets while playing a central role in implementing the Dodd-Frank law's swaps markets reform. He was a tough regulator, but a fair one, tasked with challenging responsibility after the passage of Dodd-Frank. I know that Mr. Gensler will work to ensure that the United States leads the world in fighting corruption and ensuring transparency in its markets to protect U.S. investors. Now a professor of the practice of global economics and management at MIT Sloan School of Management, Mr. Gensler conducts research and teaches his blockchain technology, digital currencies, financial technologies, and public policies. So, Mr. Chairman, I am pleased to be joined by my colleague, Senator Chris Van Hollen, in recommending to this committee for confirmation Gary Gensler to be the next chair of the SEC.
Thank you, Senator Cardin. We now call on a respected member of our committee, Banking, Housing, and Urban Affairs, Senator Van Hollen, also from Maryland. Chris, thank you for joining us again.
Thank you, Mr. Chairman, Ranking Member Toomey, members of the committee. Congratulations to both these nominees, Mr. Chopra and Mr. Gensler, for being nominated. And I'm thrilled to join my partner and senior senator from Maryland, Ben Cardin, in recommending strongly to the committee Gary Gensler to chair the Securities and Exchange Commission. Senator Cardin has covered his Maryland roots. Gary is a good and dear friend. But for the purposes of today's hearing, the most important thing are his stellar qualifications and great judgment. Gary Gensler is somebody who combines a brilliant mind with a good heart and excellent judgment. He does have the expertise to take on this important responsibility at this time, and I'm absolutely confident that if confirmed, he will serve our country admirably and well in this position. In the state of Maryland, Mr. Gensler was the chairman of the Maryland Financial Consumer Protection Commission, where he earned a reputation for championing the consumer's interests with respect to students, veterans, and service members. And I must say, he had a great bipartisan track record. He forged unanimous agreement by members of the commission, and legislation that they recommended passed the General Assembly on a bipartisan basis. Senator Cardin has mentioned his important work with the former chairman of this committee, Senator Sarbanes. And of course, Mr. Gensler is known as one of the quiet heroes of the response to the Great Recession. As head of the CFTC, he was one of the people that did impose financial accountability on big banks and other financial institutions. He cracked down on the manipulation of the London Interbank Offered Rate, or LIBOR, which sets interest rates on many bank loans, and his work on that front resulted in charges being brought against 5 financial institutions who paid $1.7 billion in penalties. So, in addition to his, current cutting-edge efforts in cryptocurrencies and blockchain technology, Gary Gensler is the right person for this job. I want to just say to his 3 wonderful daughters, Isabel, Anna, and Lee, we're proud of your dad, and it's good to see, I think, Isabel joining Gary there at home. So thank you, Mr. Chairman, members of the committee. I strongly recommend this nomination to the Senate.
Thank you, Senator Van Hollen. Senator Blumenthal, I'd like to recognize, thank you for joining us as a guest of this committee, as Attorney General of Connecticut, and now as a senator. He's got lots of expertise in these issues. Senator Blumenthal.
Thank you so much, Chairman Brown and Ranking Member Toomey. I'm honored, very honored, to visit with the committee on this occasion with such eminently qualified, distinguished nominees for their respective posts. And really, I couldn't be prouder to introduce to the committee Rohit Chopra, because I couldn't imagine a better person to head the Consumer Finance Protection Board at this critical time. It is indeed an economic crisis that has burdened particularly communities of color, and Rohit Chopra is sensitive to the challenges that those communities of color encounter in this perfect storm of economic crisis. Consumers can be sure he will be in their corner and have their back. He has a great mind and a deeply good heart. And I have seen him fight for consumers, but fairly so, heeding the need for bipartisanship and listening to stakeholders on both sides of issues. He is indeed tough but fair, insightful, and perceptive, but he also has reverence to the American values that have motivated him throughout his extraordinary career at the highest academic institutions and then in public service. As the current chair of the Consumer Protection Committee and formerly ranking member, and as you observed, Chairman Brown, Attorney General of the state of Connecticut for 20 years, I have been involved in observing the importance of fair, tough enforcement of consumer protection laws. And he fits that need right now. But I've also seen his work, his fight to protect the Made in America label, which means more jobs for Americans. That Made in the USA label deserves enforcement. His vigilance to the harms of big tech, collaborating with state attorneys general and with his Republican colleagues, benefiting consumers and competition. His expertise and experience in protecting household and students from unfair and burdensome practices. And of course, he has been saluted by veterans organizations. As a member of the Veterans Affairs Committee, as is the chairman, I am very, very proud to recognize the strong endorsements that he has received from military and veterans organizations for his work in protecting them against the kinds of predatory threats that exist now more than ever. I believe that tough and fair enforcement of consumer protection laws is actually pro-business because it protects the good guys from an unlevel playing field when those kinds of competitive or consumer laws are violated by members of the business community who may be trying to cut corners and putting the good guys at a disadvantage. I think Rohit Chopra will be an extraordinarily distinguished head of the CFPC, and I look forward to his serving with distinction. Thank you, Mr. Chairman.
Thank you, Senator Blumenthal, and thank you, Senator Cardin, both of you for being guests of this committee. Let's move on to the nominees, Mr. Gensler and Mr. Chopra. If you would both raise, if you please stand, you can adjust your cameras or not. It's up to you. Stand and raise your right hand. Do you swear or affirm the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help you God?
I do.
Do you agree to appear and testify before any duly constituted committee of the Senate?
I do.
Thank you. You may be seated. Mr. Gensler, you're now recognized for 5 minutes to provide your opening statement. Both of you, I know Isabel's been introduced 4 times now, but both of you feel free to introduce family members that are watching or nearby or sitting over your shoulder in your Maryland apartment or in your Maryland home. So, Mr. Gensler, if you would begin first for 5 minutes. Thank you.
Chairman Brown, Ranking Member Toomey, members of this committee, it is an honor to appear before you. 2 decades ago, I served on this committee staff under Chairman Paul Sarbanes, who we sadly lost this last year. And today, I am proud to be here as President Biden's nominee to chair the Securities and Exchange Commission. I have spent my entire professional career in and around financial markets, in the private sector, in state and federal government, and now in academia. And I believe our markets are the finest in the world. But they didn't become that way through happenstance. In the shadow of the Great Depression, Congress created the SEC to protect investors, maintain fair, orderly, and efficient markets, and to facilitate capital formation. In the decades since, we have seen that when the SEC does its job, when there are clear rules of the road and a cop on the beat to enforce them, our economy grows and our nation prospers. But when we take our eyes off the ball, when we fail to root out wrongdoing or adapt to new technologies or to really understand novel financial instruments, things can go very wrong. And when that happens, people get hurt. 12 years ago, when I became chair of the Commodity Futures Trading Commission, our economy was reeling from the financial crisis. My fellow commissioners and I took decisive action on a bipartisan basis to increase transparency and reduce risk in the $400 trillion swaps market. And I am proud that 85% of our actions were passed with bipartisan support. If confirmed as SEC chair, I will work with my fellow commissioners, the SEC's exceptional staff, and the members of Congress to ensure our markets remain the world's best. That means strengthening transparency and accountability in our markets so people can invest with confidence and be protected from fraud and manipulation. It means promoting efficiency and competition so our markets operate with lower costs to companies and higher returns to investors. It means making sure companies, incumbents, and entrepreneurial startups alike can raise needed capital to innovate, expand their operations, and contribute to economic growth. And above all, it means making sure our markets serve the needs of working families. I'm a product of a working family. Senator Cardin was kind enough to say he knew my folks. Neither of my parents went to college, but my father was able to take his mustering out pay from World War II and start a small business that would eventually send my 4 siblings and me to college. That is the kind of economic opportunity that should be available to each and every American, no matter who they are. I believe our markets are essential to providing that opportunity. That's because capital markets touch every part of the economy. They enable businesses to develop new products, build new facilities, grow their payrolls. They help working families save for retirement and invest in their children's futures. And although it may not seem intuitive, when someone goes to take out a mortgage or open a credit card, our capital markets are on the other side of those transactions as well. We cannot take any of this for granted. Markets and technology are always changing. Our rules have to change along with them. In my current role as a professor at MIT, I research and teach on the intersection of technology and finance. I believe financial technology can be a powerful force for good, but only if we continue to harness the core values of the SEC in service of investors, issuers, and the broad public. Before I close, I do want to introduce and thank my 3 daughters, Isabel, who's here with me in Maryland, over there, and her older sisters, Anna and Lee, who are watching remotely. They're the lights of my life, and I wouldn't be here today without their love and support. I thank you, and I look forward to your questions.
Mr. Gensler, thank you. Commissioner Chopra, and feel free to introduce your family if people are watching, and thank you.
Mr. Chairman, Ranking Member Toomey, and members of the committee, my name is Rohit Chopra, and thank you for the opportunity to appear before you today. And thank you to Senator Blumenthal for that kind introduction. It is an honor to sit before you as President Biden's nominee to lead the Consumer Financial Protection Bureau. I am so grateful for the support of my family, friends, and colleagues, so many of whom are joining us virtually, and I wish we could be in the same room. I'm especially thankful to my parents. I last saw them exactly 1 year ago to celebrate my mother's birthday, the longest stretch of time without being physically together, an experience that I know is all too common today. America in March of 2021 is far different than of a year ago. Every week, we've seen hundreds of thousands lose their jobs, local businesses have shuttered, and more than 500,000 have died. And while there's some hopeful signs that the tide is turning, we must not forget that the financial lives of millions of Americans lay in ruin. Experts expect distress across a number of consumer credit markets, including an avalanche of loan defaults and auto repossessions. And there's other persistent pain points for consumers that are felt particularly acutely today. making it harder for those families to get back on their feet even as this pandemic ends. Consumers continue to discover serious errors on their credit reports or feel forced to make payments to debt collectors on bills they already paid or never owed to begin with, including for medical treatment related to COVID-19. Many of these longstanding problems will make it more difficult for our country to sustain a full recovery. This is especially true when it comes to our housing market. For most of us, much of the last year has been spent at home. Our homes are more than physical structures. They have served as offices, schools, and so much more, providing safety and refuge during this deadly pandemic. But due to the economic devastation due to COVID-19, millions face the prospect of losing their home, with communities of color particularly at risk. Many have seen their jobs disappear and will not be able to easily resume their payments. In the last economic crisis a decade ago, we saw how unlawful and unavoidable foreclosures proved to be catastrophic in cities, small towns, suburbs, and rural areas alike, contributing to deeper social divisions and inequities. We once again face an important test to ensure that troubles in the housing and mortgage markets do not sabotage the recovery of our local communities. And in the mortgage market especially, fair and effective oversight can promote a resilient and competitive financial sector, address systemic inequities faced by communities of color, and more. But perhaps more importantly, administration of our laws can help families navigate their options and save their homes. Congress has entrusted the CFPB with carefully monitoring markets to spot risks, ensure compliance with existing law, educate consumers, and promote competition. This not only helps protect Americans from fraud and other unlawful conduct, it helps ensure that businesses that follow the law, regardless of their size or clout, can compete. 3 years ago, I sought the Senate's confirmation to serve as an FTC commissioner, and I was honored to be unanimously confirmed and to work with members of both parties to turn the page on some of the failed and outdated policies of the past. If confirmed to lead the CFPB,
that we are current crisis, forbearances and the foreclosure moratorium for federally backed loans have helped many homeowners remain in their homes, but more than 11 million families are behind on their rent or their mortgage payments. Millions of workers face layoff and reduced hours as a result of the pandemic. What role, Commissioner, what role can the CFPB play in helping to prevent another foreclosure crisis among these homeowners who, as you know, are disproportionately people of color?
So, Senator, we saw how a decade ago the foreclosure crisis not only devastated economies, it widened wealth gaps, and it caused so much devastation to children and communities. You know, we learned from the last crisis that regulators missed some of the linkages between the mortgage market and the broader economy. We saw too many unlawful foreclosures. It's going to be critical for the CFPB to monitor those markets using the best available data and insights, enforce homeowner protections when it comes to foreclosure mitigation, and work across the government so we do not see a deja vu of that crisis again.
Thank you, Commissioner. Mr. Gensler, the last few months, we've seen unprecedented volatility in trading in many stocks, most notably GameStop. Wild trading drove the stock price from $18 at the beginning of January to $325 at the end of the month. People are using the term gamification, but we know Wall Street has treated markets as a game for years. We can't forget that how this affects real people's hard-earned pension funds, their 401ks, their small business investment, their college savings, their down payments for home, all at stake. Mr. Gensler, what does this volatility mean for them and the goal of a market that's fair for everyone? And what steps do you think SEC needs to take?
Mr. Chairman, in some ways, it's a story as old as markets themselves, that the clash between buyers and sellers of opposing views. But in other ways, this story is about this new technology and technology changing constantly finance. A few things I think are questions, or at least are in my mind if I was honored to be confirmed. How to ensure that customers still get best execution in the face of payment for order flow. How to protect the investors using trading applications with behavioral prompts designed to incentivize customers to trade more. How to ensure customers access to markets when those apps may at times fall short of needed margin funds. How to promote competition in markets when a few firms may come to dominate those markets. And how to update back office infrastructure to lower risks and costs.
Thank you, Mr. Gensler. Commissioner Chopra, my last question. 1 year into the pandemic, millions of Americans we know struggle to pay their bills. A recent Bureau report makes clear that financial institutions are essentially making things worse. Lenders have inaccurately reported consumers as delinquent to the credit bureaus. Debt collectors illegally garnished consumers' wages or bank accounts. Federal student loan servicers provided borrowers with inaccurate information about payment relief options, including the servicer that handles the public service loan forgiveness program. Outside of housing, which is obviously a very, very, very important category, what do you see as the biggest risk people face to their finances during the pandemic, and what role does the CFPB play?
Well, there are so many, whether it comes to credit reporting or debt collection, and if there are unlawful, egregious practices, it is important for enforcement to make sure that they stop. That's what's best for consumers, that's what's best for the honest market participants, and that's the role Congress has asked the CFPB to play. It will also be critical for the CFPB to take a hard look at how big tech companies and others are entering financial services, the impact on our privacy and our personal data. So we must look at today's problems, but also anticipate tomorrow's risks.
Thank you, Commissioner. Ranking Member Toomey.
Thank you, Mr. Chairman. Now, my understanding is you had agreed, Mr. Chairman, that we would do 2 rounds of questions. So I'd like to address my first round of questions to Mr. Gensler, and then I'll use the second round for Mr. Chopra.
Yes, there will be 2 rounds. We discussed that.
Yeah.
Thank you.
Yeah, great. Thank you. So, Mr. Gensler, just to start, I've got a couple of very simple questions. I think really basically yes or no questions. I recently wrote a letter to the acting chairman encouraging the SEC to undertake several non-controversial good government initiatives. I think you looked at that letter and described it to my staff as very thoughtful. Can you commit to us this morning to have the SEC evaluate whether or not to undertake the initiatives in my letter and report back to this committee in writing if you decide not to pursue any of them?
Senator Toomey, as we also discussed in the private meeting, I thought it was very helpful, a number of these initiatives, whether to shorten some of the settlement cycle and look at transfer agents. So I do look forward to, once confirmed, if confirmed, working with the staff of the SEC and working with your staff and you on these matters.
Okay, thanks. And I do hope that that will include considering a faster settlement cycle on equities, because I think that's a big opportunity for us. Let me move on. The SEC, as you know, is currently reviewing a board diversity rule that NASDAQ is trying to impose on NASDAQ-listed companies. The rule would require their boards to have at least one woman and one person who identifies as a member of an underrepresented racial or ethnic group or LGBTQ, or to explain why they have failed to meet that requirement. As you may know, every Republican on this committee recently sent a letter to the SEC urging the SEC to disapprove of this proposed rule. While America's corporations certainly benefit from boards that have a diversity of perspectives and experiences, race, gender, and sexual orientation do not ensure any such diversity. Furthermore, the NASDAQ should not use its quasi-regulatory authority to impose social policies. And boards really should be acting in the shareholders' best interest to nominate simply the best, most qualified people as directors. Now, I understand I don't expect you to tell us this morning how you will vote, how you will rule on NASDAQ's specific board diversity rules. So let me just ask a more general question. Do you think that it's a good idea for company boards to be forced or pressured to comply with some kind of quota with respect to race, gender, and sexual orientation?
Senator, thank you. And I have taken a look at your letter, which is in a file, I think, of nearly 200 comments. And so I'll, if confirmed, we'll take that up amongst all of that. But on your more general question, I do think that diversity in boards and diversity in senior leadership, as I had answered the chairman earlier, benefits decision making, and it's something that I'm committed to at the SEC and the leadership there. And I think that it's a positive step forward in the leadership at the SEC that, if confirmed, I'm going to take on.
So when we spoke by phone recently, I think you committed to basing disclosure requirements on materiality, that they had to be grounded in materiality. Is that a fair characterization?
Yes, Senator Toomey, that is.
I'm almost out of time here. So let me just say, so if a company, a business, a publicly traded company spends a financially insignificant amount of money on, let's say, electricity, is it material whether that electricity came from renewable sources or not?
Senator, I think materiality, as the Supreme Court has said, is about, it's got to be significant to the mix of information to a reasonable investor. And I think that test will always ground our economic analysis and how we move forward on this. In your hypothetical, it may not be material, or it may be material depending on the total mix of information.
So even though it's financially insignificant in my hypothetical, you think it could still be material?
I think that materiality is the total mix of information, and often a small piece of information is not material. You're right about that, but I would have to take it into context of the entire mix of information.
Well, I would just suggest that if it is financially insignificant, I don't see how it could be material. Let me ask a different question. Apple's revenue last year was, I think, about $274 billion. If Apple spent $1 million on political spending on issue ads, would that be material, something that ought to have to be disclosed?
What we found is materiality is defined is what reasonable investors are seeking to have to make their decisions, either to invest or not to invest, or to vote yes or vote no. And last year's proxy season, I think, shares with us that many investors, well over 40% of investors in those proxy votes, actually think that that would be material to get such information.
So even though it's completely insignificant, couldn't possibly affect any financial results whatsoever, you think it might be okay to mandate that disclosure?
I will be grounded in economic analysis, and the court's view of materiality is what investors, reasonable investors, want, and the significant mix of
That's here. It looks like his name's up there.
And
sorry.
But if this is financially insignificant information, and some investors would like to have it, why not leave it up to the companies to decide whether to disclose it and thereby ingratiate themselves with investors who care about it?
Well, Senator, I think that it's about investors making a choice as to what's significant or what's material, to be more accurate, what's material for those investors. I will always be grounded in the courts and the law and the economic analysis about materiality, what reasonable investors are seeking when they make decisions to invest or not to invest, or vote yes or vote no.
The last question. There are two recent rulemakings by the SEC. One requires proxy voting advisory firms to provide investors with more transparent, accurate, and complete information about their business. The other modernized the thresholds to limit the ability of shareholders to just harass companies with repeated failed special interest proposals. Do you have plans to revisit these rules, or do you intend to leave them as they are?
Senator, if confirmed, I would want to work with the staff and the economists and fellow commissioners to understand those rules better, to see whether, for instance, in the proxy advisory area, has it addressed the potential conflicts of interest at the least amount of cost, and see if it's positive in achieving the mission of the agency.
Thank you, Mr. Chairman.
Thank you, Senator Toomey. Senator Reed of Rhode Island.
Well, thank you very much, Mr. Chairman, and I want to thank the nominees. Mr. Gensler, in light of the volatile trading we have seen in securities favored by individual investors, some have pointed to payment for order flow, the practice in which market-making trading firms pay brokerages for the right to execute orders submitted by individual investors, as an area that deserves greater scrutiny and perhaps reform. Critics claim that payments for order flow warp the incentives of brokers and encourage them to maximize their revenue at the expense of retail investors by encouraging excessive trading. Supporters say it is misunderstood and helps ensure liquidity of investors. And now, if confirmed, Mr. Gensler, could I have your commitment that you'll evaluate payment for order flow and related practices to determine whether retail investors truly benefit?
Senator Reed, yes, I think that technologies change and markets change, but we should always evaluate new approaches to markets, and payment for order flow is something that I think the recent events, as you rightly pointed out, raises. It's important to look at economically and look at whether retail investors are getting best execution in the context that you mentioned.
Thank you. And of course, if they're not, then I would presume you would take appropriate action to see that retail investors are protected.
At the core is about protecting investors. That's a core of the mission of the agency.
Thank you very much, Ms. Gensler. Chairman Chopra, as you recall, I was very active in the Dodd-Frank debate about the military, and from personal experience, but we created in your agency the Office of Service Member Affairs in the CFPB. And could you explain or elucidate how you can make better use of this office if you're confirmed?
So, Senator, there's no question that health of military families is also about health of our country. The Department of Defense has stated that the financial status of service members directly relates to their ability to keep a security clearance, to be able to do their jobs. So it will be important that our Office of Service Member Affairs, if I'm confirmed, is looking at risks to military families, veterans, survivors, and others. There are some concerns that we've seen over the past few years, everything from issues in VA home loans to credit reporting issues and ongoing issues with the Service Member Civil Relief Act. I would hope to work closely with the Department of Justice, with adjutants general, with attorneys general to make sure that the CFPB's Office of Service Member Affairs continues to play a leading role in analysis, working with the DoD, and also making sure that we are taking the appropriate steps to protect service members, veterans, and their families from abuses. There are so many firms that want to serve the military well. They should not have to compete with those who break the law.
Well, thank you very much, Commissioner. Another area of concern is student debt in many ramifications, but my observation is that previous operations of the CFPB stopped many of the appropriate actions that were being taken. For example, in the Card Act report, describing information about debit cards that are issued by colleges and universities. So will you consider returning to the prior practice of including information on campus financial products such as campus debt, card products in the card report? And what do you see are the most important consumer protections for students?
So, Senator, Congress has made it clear that there are concerns when it comes to financial products being offered to college students. We saw this issue in the Card Act. But of course, there are new products and services being offered to college students. We want to make sure that all students, high school students, those right out of college, are starting their financial lives with a good future ahead. We should educate them. We should work with the Department of Education and the Treasury on issues of common concern. And I'm absolutely committed to making sure we're monitoring those markets and reporting to Congress on those trends.
Thank you very much, Commissioner. Thank you, Mr. Gensler. Thank you, Mr. Chairman.
Next, Senator Reed, Senator Shelby from Alabama.
Thank you. Good morning, Mr. Gensler. We're glad to have you before the committee again, although in a remote kind of way because of COVID. Senator Toomey a few minutes ago got into economic materiality, and of course I don't recall the word political materiality, but there is a difference there. Could you talk about the difference between political materiality in dealing with a regulation as opposed to economic materiality? I think there is a difference, Mr. Chairman.
Yeah. Senator Shelby, or as I used to call you, Chair Shelby, it's so good to see you again. And if confirmed, I look forward to working with you again. I'm going to be grounded, if confirmed, in the economic side. And economic analysis, as well as what the courts have defined as material to a reasonable investor. In essence, that it would have a significant effect on their decisions given the whole mix of information they have. That's where I'm going to be grounded. I'm, of course, aware of the difference between that and the political ebb and flow of the day.
Are you aware, I'm sure you would be, under the Obama administration, the SEC chairman, the SEC adopted what we call a cost-benefit analysis and so forth. Do you believe in cost-benefit analysis in dealing with any future regulation or doing away with the regulation?
Senator, yes. It's for lots of reasons. I'm a professor of global economics and management, so it's at the heart of what we do there. But I also think it's the heart of good decision-making for any rulemaking.
How important would it be to the SEC to adhere to what that was adopted in 2000, I believe, 12 by the SEC, and they're going through that today? And I assume, if you're confirmed, that you would follow that same trend.
If you're referencing cost-benefit analysis,
right,
and the SEC's guidance, I do believe that, sir, that it's a good format, and that the excellent staff at the SEC, I turn to them and the economists and the teams there.
I think if we look back in the history of the SEC, and we've seen a lot of working together, bipartisanship there and so forth, putting the consumer first there. In other words, the investor and so forth. Will you be able to work with the Republicans on the committee there? You probably know them. And how important will that be to have a function in the SEC?
I think there's a real benefit to the American public if 5 eyes, 5 minds, 5 different opinions. You're right. I've known both Hester Peirce and Elad Roisman for a number of years. One Hester who worked with you, I know. And we'll have some differences from time to time. I just hope that when we differ, we disagree agreeably. But I'm going to look to see where we can work together.
Let me ask you a question I've asked on the banking committee for the last 34 years, I guess. Every proposed chairman and nominee for the SEC board. Who owns the corporation? Do the managers own it? Who owns it?
The shareholders.
Shareholders. And management should work for the shareholders first, should they not?
Yes, Senator, that is correct.
And you believe that, and you know that's true in corporate America, do you not?
It is the law in, I think, all 50 states.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator Shelby. Senator Menendez of New Jersey is next.
Thank you, Mr. Chairman. Congratulations to both of you on your nominations. Mr. Gensler, to date, more than 1.2 million securities experts, institutional and individual investors, and members of the public have pressed the SEC for a political spending disclosure rule. That's a pretty significant amount of public input for any potential rule. Since there are no political spending disclosure standards, corporate executives can spend shareholder money that benefits them and not the business. It can be a lucrative setup. Insiders can use someone else's money to support political causes that they favor. The fact that so many companies have reevaluated their political contribution plans after the January 6th attack on the Capitol shows just how quickly companies have realized the potential contributions have on a material impact on their reputation and the viability of their businesses, which is why I am reintroducing my Shareholder Protection Act, which would require companies to disclose the details of political expenditure and ask their shareholders for approval. Do you agree that political contributions by publicly listed corporations represent material information that could affect a company's financial performance and therefore should be disclosed to investors?
Senator, as we discussed in our private meeting, disclosures are critical to investors and promoting capital formation. Without prejudging a specific issue, I can assure you that I'll be grounded, if confirmed, in the materiality standard that drives all those decisions on disclosure. And as you said, 1.2 million public comments to the SEC, but I would also say I would consider last year's proxy season, which I think was close to 80 shareholder proposals, if I'm not mistaken, and over 40% of those investors voting supported it, even including Netflix adopted it, that they want to see what the companies they own are doing in the political arena. So if confirmed, it is something that I think the commission should consider in light of the strong investor interest.
Well, thank you for that answer. I believe that shareholders should know if their corporate executives are using their money as a piggy bank for their causes, and that would to me as an investor, that would be important. I know that the ranking member asked you questions about diversity, and he was talking about a mandated proposal. I'd like to talk to you about, just the question of disclosure again. I think disclosure to the American investing public is incredibly important. Disclosure is investment to us as a government, when very often we are called upon to solve the problems of these corporations when they face financial challenges, as we saw in the Great Recession, as we've seen to some extent in some of these companies as a result of the pandemic. So the problem is that corporate America has a diversity problem. Boards and executive offices across the United States do not look like the people of this country. I have conducted 4 diversity surveys of Fortune 100 companies since 2010. My latest survey revealed that over the past 10 years, women and people of color have only made marginal gains in representations on corporate boards, senior executive management. I was originally hopeful that the SEC would help address this problem through its 2009 diversity disclosure rule, but unfortunately, the 2009 rule failed to even define diversity. And studies have shown that greater diversity on executive teams has led to greater profitability and therefore better outcomes for shareholders. Do you agree that greater diversity tends to lead to better corporate performance, as found by McKinsey and others?
Senator, I'm familiar with those studies, and they're well-crafted studies. My own experience is diversity is a very positive part of decision-making and enhances that decision-making.
And again, this is not forcing a corporation to make these decisions, but simply disclosing, giving the relationship between diversity and performance. Do you agree that investors should be informed about the policies companies have in place to promote diversity in their corporate leadership?
So if I can broaden it out, I think human capital is a very important part of the value proposition in so many companies. And Chair Clayton and the SEC took up some approaches to human capital, but I think it's always evolving, and that we will look at how will investors and what information investors want in this broad arena about the human capital, including diversity, at their companies they're investing in.
Well, I'll just close, Mr. Chairman, by saying a lot can be done to improve upon the 2009 diversity disclosure rule. It doesn't even define diversity. But I just think in one dimension, the Hispanic community, largest minority in the country, $1 trillion domestic marketplace spending, younger by a decade than the rest of the population, more brand loyal than any other group. From a corporate perspective, I'd like to be on them like white on rice. But as a community, I want us to know who's diversifying and who's representing the opportunities for us to have a say on corporate boards and senior executive management and procurement. So I hope you'll look at that seriously. Thank you, Mr. Chairman.
Thank you, Senator Menendez. Senator Scott from South Carolina.
Thank you, Mr. Chairman, and thank you, Mr. Gensler, for being here with us today. I look forward to having a few minutes conversing about some of the more important issues that I find as the priorities that we'll look at. I will add to the conversation you were just having with Senator Menendez about diversity in the board room as well as in the C-suite. I think they are important issues. I do think that how we determine the government's impact on that issue is really important. Mandates is something that I would adamantly oppose. Gathering more information can be helpful and instructive as long as we are not pursuing an outcome based on what we would see as implicit bias in some form or fashion. I think we have to be very careful how we step into this minefield from my perspective, but it is important for us to make progress, and I look forward to having a longer, broader conversation with members of this committee, as well as with you, sir, on ways that we might work together on achieving goals without having mandates. That being said, last year, the Federal Reserve 13(3) emergency facilities discriminated against smaller NRSROs by requiring a rating from incumbent rating agencies to access relief. I worked with Senator Sinema to introduce bipartisan legislation to address this issue. The companion bill passed the House unanimously. Mr. Gensler, you've been around long enough to know that darn near nothing passes the House unanimously, no matter who's in control of the House. So having something that moves forward unanimously, I think, is a good sign that we all, left and right and left, all want to see introducing more agencies within the NRSROs. So my question for you, sir, is do you believe that supporting open competition among NRSROs is important to protect investors and promote vibrant capital markets? And will you commit to opposing federal government action to further entrench the incumbent NRSROs? In other words, I think competition is absolutely essential. And even in the credit agencies, if we can have more competition there, I believe that the newer agencies are oftentimes using more information to assess credit worthiness. And if that credit worthiness is accurate and consistent, introducing more competition there is going to be in the best interest of the consumer.
Senator Scott, I agree with you that competition is is really important in the credit rating space and also more broadly in the capital market. So I look forward to working with you and your staff and the excellent staff at the SEC to see how we can support and promote competition in the credit rating space and even more broadly as well, by the way.
Yes, sir. Well, thank you for that. I do think it's really important for us to find a way to help those who are credit worthy to be scored as credit worthy. Now, this is something that I've tried to be a champion of for the last few years, and the importance of that can't be underscored in any other market than in the ability to engage in the financial markets. And I do believe that having diversity and or competition, I should say, in the credit rating agencies themselves is one of the ways that we promote and encourage better and more accurate information so that those who view the information have a wealth of knowledge to pull from. And without that competition, whether it's a monopoly or duopoly or the three that we have today, that is probably not in the best interest long-term of the consumer. Thank you, Mr. Gensler. I will return the rest of my time. Yield back the rest of my time.
Thank you, Senator Scott. Senator Tester of Montana.
Thank you, Chairman Brown and Ranking Member Toomey. And I want to express my appreciation to Gary Gensler for meeting with me earlier today. I appreciate that conversation. Gary, I'm going to give you a little break from questioning. Most of my questions, in fact, all my questions will be at Mr. Chopra. So, and Mr. Chopra, I appreciate our meeting too, even though it was a while back. I've got to think about what we talked about. And so that's why I want to ask these questions. The first one kind of goes down the same line that Senator Reid had talked to you about with service member and veteran protection. You talked about in the questions to Senator Reid, you talked about being able to work with the Department of Justice and DOD from a prosecution standpoint, I would assume. My question is what would you do to address those who were harmed in the previous administration when the CFPB wasn't as functional as I would have liked and didn't take the action that they should have? How are you going to make a determination on who and what cases you're going to take a look at?
So, Senator, when it comes to service members and veterans, I think we have so many sources of data and information, whether it's consumer complaints, whether it's our judge advocates general. We need to hear what's happening. I will tell you that I really want to make sure that we're listening carefully when it comes to mortgage and housing issues. We saw a decade ago the illegal foreclosures of active duty service members. You even had families flying back from overseas to take care of some of these issues. Those violations were egregious, and we need to look at where we see consumer complaints to conduct trend analysis, what we're seeing in any supervision to determine how to correct that. And again, I think most financial institutions want to stay on top of it. But there are some who, we have seen have flouted the law when it comes to the Service Member Civil Relief Act, when it comes to the Military Lending Act and other laws. So it will be a team effort. It will be a data-driven effort and also listening carefully to what the issues are. We cannot afford to have disruption again in our mortgage market or frankly, any of our other markets when it comes to service members and veterans.
Well, I appreciate that, and hopefully, and I agree with you. I think the vast majority of folks who deal with our veterans appreciate what they've given to this country and treat them fairly. But for those outliers, we will call them. Hopefully, you will prosecute to the fullest extent of the law, because I can't think of a worse, quite frankly, inappropriate transaction to take place when you're taking advantage of the people who have sacrificed and served this country. So thank you for that. I want to talk a little bit about QM. Look, the CFPB making sure that folks have the ability to own their own home is critically important. So my question to you is a bit general, but you can get it specific pretty quick. What do you view as the most important considerations as the CFPB looks to revise the QM rules?
So, Senator, I have a completely open mind about this, and I look to what the statute says and what really Congress's goals are. The CFPB is not here to dictate housing finance policy. It's to make sure that the prohibitions when it comes to our mortgage laws are adhered to. And when it comes to QM, it is important that we balance the consumer protections that the Congress has put into place with access, including for rural and other areas as Congress has put forth. We don't want to go back to what we saw in the years leading up to the financial crisis of liar loans and other fraud in the mortgage marketplace. Ultimately, we are stronger as an economy, stronger as a country, if mortgage lending is safe, broadly accessible, and a way that people can build wealth. So I'm looking forward to getting input from everyone and determining how that rule needs to evolve over time. And I look forward to working with you and others on the committee.
Thank you. And I need you to be very quick with this one because my time is about out. Look, I don't think there's an area of the country that affordable housing isn't an issue. What are your housing priorities once you're confirmed as CFPB?
I think I would want to work with the staff and others, but my intuition is we have to be ready for potentially looming problems when it comes to forbearances that might flip to foreclosures. I don't want to see another foreclosure crisis in this country, and we need to do everything we can to make sure the law is being followed and homeowners can navigate their options.
Thank you both. Appreciate your time. Thank you, Mr. Chairman.
Thank you, Senator Tester. Senator Rounds from South Dakota.
Thank you, Mr. Chairman. Let me just begin with Commissioner Chopra. Thank you for speaking with me recently about your interest in the CFPB.
He's got one picture behind him. You can see it. It's a
One of the topics we discussed was the CFPB Civil Penalty Fund and a number of concerns I had about the fund's transparency and how the money is used. Fines levied by the CFPB could range from $5,000 per day up to $1 million a day, which is a significant range with broad discretion given to the CFPB as to what level of fine is appropriate. Mr. Chopra, as you and I spoke the other day, I am not a fan of the CFPB, but I just I need to get into this a little bit with you. In addition to this broad range of fines that the CFPB has, the GAO has identified a number of opportunities in the past for the fund's transparency to be improved. Can you please share your thoughts on what you believe to be the appropriate uses for the Civil Penalty Fund and how you will work to promote transparency of the fines that are paid into the fund?
So, Senator, thank you again for sharing your concerns about this. I had a chance to review the audits, review the statute again. You expressed a concern that those funds should not be used to subsidize Bureau operations. I completely agree. It would be inappropriate if the funds were not used for the statutory reasons. That is primarily for victim redress. The law is clear that it is a victims relief fund, and it can also be used for certain financial literacy efforts. You have my absolute commitment that it will not be used for any other purpose, and it would be inappropriate if it were. I will also look at ways to make sure that there is understanding about when there is an award to go to victims. It needs to be clear about how those victims, the success rate of that, what amount of funds were returned, and anything we can do to make sure that that fund is for victim relief and the express statutory purposes. I am completely committed to, and in as much that there are any concerns about it, I am committed to correcting that.
Thank you. And I think the point that you make that it's also for literacy would suggest that it's also available in terms of contracting with nonprofit organizations. Fair to say that that should also be fully disclosed with regard to any contracts made with other nonprofit organizations in the name of literacy?
Well, it better be. It's required to be disclosed. It's subject, as my understanding, according to the audits, to procurement law. And if it hasn't been, then it better be fixed. So again, though, I do want to be clear. I do think the most important part of that fund is for victim relief. There are many, many consumers who are subject to fraud, and the company is judgment proof. Those penalties can be used to redress them. But again, if there are contracts, they better be disclosed.
Thank you, Ms. Chopra. Mr. Gensler, once again, thanks for taking the time to visit with me as well. Two of my colleagues that introduced you today touted your expertise in digital currencies. I'm proud that crypto companies like Anchorage Trust have found a home in South Dakota. At the same time, I know that our outdated crypto regulatory regime is leading other organizations like the Diem Association to set up shop overseas. What can Congress and the SEC do to create a more forward-thinking regulatory environment for innovators in this particular space?
Senator, thank you for having met with me and for that question. I think as I teach at MIT on these subjects, that these innovations have been a catalyst for change. Bitcoin and other cryptocurrencies have brought new thinking to payments and financial inclusion, but they've also raised new issues of investor protection that we still need to attend to. And so I think if confirmed at the SEC, I'd work with fellow commissioners to both promote the new innovation, but also at the core, ensure for investor protection. If something were a security, for instance, it comes under the securities laws, it comes under the SEC. If there's exchanges that trade those, to ensure that there's the appropriate investor protection on those exchanges. So promote technology, but still stay true to our core values of investor protection and capital formation.
Thank you. Thank you, Mr. Chairman. My time has expired.
Thank you, Senator Brown. Senator Warner from Virginia.
Mr. Chairman, and let me start by saying I think we've got two great nominees here today, and I look forward to supporting both of them. Mr. Chopra, I think I'm going to be hitting Mr. Gensler more, but I do appreciate our meeting, and I think you're going to do a great job. Mr. Gensler, I've long been fighting in a pretty obscure area around market structure for trying to eliminate some of the conflicts of interest in our market structure that disadvantage retail investors. You may recall back in 2017, I urged the SEC to do a maker-taker pilot. That pilot started, the courts came in and shut it down, although it still said that the SEC could still do a rulemaking in that area. I think this whole question of market structure and payment for order flow has been, interest has been reignited around GameStop. And I look at the Robinhood platform where oftentimes it is being paid for its market flow by a number of prominent hedge funds. I sometimes think that the Robinhood structure is somewhat similar to the Facebook structure. I'm not sure if you're a customer of Robinhood, whether you are really a customer or a product, somewhat similar to the fact that users of Facebook, I think, are often used as products rather than as actual customers. We've seen in the last year close to $6 billion paid to brokers to route transactions through specific venues, as opposed to really getting the best execution price for customers. I think that dramatically disadvantages retail investors. When you get confirmed, what will you be able to do to look at this issue?
Senator Warner, I think you're right that the technologies have raised some very important policy issues on how we continue to promote efficient, fair, and orderly markets. And what we found is you've named a collection of things, but I think that we will, with the excellent staff, look at market structure in the equity markets around payment for order flow. And frankly, just a handful of financial firms are buying most of the retail flow in America. I think it raises a question, a new challenge about, just as you mentioned, Facebook. What if a company through the natural economics of network economics, collects and concentrates and dominates a field. We heard in congressional testimony a week or so ago that one firm now has 40 to 50% of the retail flow. And so what does that do to the pricing of capital in this country? I think there's important economic questions. And also best execution, as you say. What does it mean to be best execution in this context?
And I think what we've seen is someone may get a fractional marginal price better, but because the spread's so large, and if you're controlling both ends of the trade, these firms can make a huge amount of money. I think this is Mr. Chairman, I think this is an area the committee ought to be looking into. I think when the numbers come out, even you would be shocked at some of the abuse I think that's going on. I want to drill down on my last question. We often hear that we need to do these kind of rebates and payments to increase liquidity. But the remarkable thing is there's 9,000 securities that trade in the equities markets. The top 10% get about 77% of the volume, yet you have large firms like Fidelity that don't pay any broker payment fees, and oftentimes the other firms say, well, we need to make these payment fees to bring about low price commissions. Well, and to increase liquidity. If we simply said we're not going to allow rebates and these oftentimes dark payments to those top 10% of the equities because they've got enough liquidity, and still allow payments for the bottom 90%, we could at least test out this premise. Because I think, as we've seen from entities like Fidelity that don't do these brokerage payments, you can still have plenty of liquidity. And in these companies that do have or these equities that do trade with a lot of liquidity, these payments just end up with some of the abuse that's taken place. In these last 15 seconds, would you commit to a full review of this market structure to eliminate these potential conflicts?
If confirmed, I look forward to working with the career staff, working with you, and doing a review of each of these issues of market structure that you've raised.
Thank you, Mr. Chairman. I'll get to you, Mr. Chopra, on my written questions. Thank you so much, sir.
Thanks, Senator Warner. And there will be a second round for those that want to stay. The ranking member asked for that. Senator Tillis from North Carolina is recognized.
Thank you, Chairman. And Mr. Gensler, thank you for being here. Mr. Chopra as well. Mr. Gensler, I'd like to start with you, and I want to talk about the financial transaction tax and some of the proposals that we're hearing in Congress. I'm sure you're aware in 1984, Sweden imposed an FTT of 1%. Share prices rose. It had a negative impact, and I think probably 7 years later, they repealed that tax. You had the EU consider it and decided not to do it for similar reasons. But now we're hearing proposals for financial transaction tax here in Congress. Do you have any reason to doubt that a financial transaction tax in the United States would have the same kind of negative impact? I know that I think the U.S. Chamber estimated an 8.5% drop, or over 20,000 on average IRA accumulation. So do you think that pursuing a financial transaction tax is a good idea, or do you think that it could have the same negative effects it's demonstrated in other jurisdictions, not to mention movement of transactions offshore?
Senator Tillis, it's not something I've studied closely in preparation for this hearing, but I would note we currently in the U.S. have a very modest, a transaction fee to support the agency of the SEC, collectively about $1.8 billion. Excuse me. A year. And so we do know that in that it's still 1.8 billion, but in that modest level that it's survived. We have the deepest, most liquid markets, and there's not been a negative outcome in that range. But I've not studied it in the way that you're talking about.
As a follow-up to this, could you possibly take a look at some of the proposals and give me some sense as to whether or not you think they could have the same kinds of negative impacts we've seen in other jurisdictions?
If confirmed, I look forward to meeting with you and your staff and having a dialogue on this.
I'd like to move over to FSOC. In late 2019, FSOC made several important changes to prioritize an activities-based approach, add transparency, procedural protections, and impose a cost-benefit analysis to the systematic risk regulation designation process. Secretary Yellen, before the committee, confirmed that she supported an activities-based approach. Do you support these types of important reforms?
If confirmed, look forward to working with Secretary Yellen, working with all the members of the FSOC on designations if they're appropriate, and there are activities-based activities that could be systemic. So, as I understand your question, yes.
Do you, and also, I don't know if you can answer this or maybe give me an answer for the record, but I'd also be curious as to whether or not you think the SEC has the necessary mandate and the tools necessary if you were to pursue that approach. If you've got an opinion now, you can state it. I've got about a minute and a half left, or you can just submit the answer for the record.
Why don't we let you, I'll do it for the record then, sir.
Okay, in my remaining minute, one thing that I'm still confounded by is how antiquated we are in the submission of information, the lack of electronic delivery. This is something I don't understand. I started my career in eliminating paper back in the 1980s when it wasn't particularly easy to do. Now we get these reams of paper sent out that are never read. People go to the electronic version. So can I get a commitment from you to really make this a priority, to really help us figure out digital delivery alternatives and the elimination of paper when the recipient would prefer that approach?
Senator, yes. Two of the things I worked on in the Clinton administration, if I can go back to there, was electronic delivery of federal payments to individuals, and also working with I think it was then Chairman McCain, working with him on something called the Digital Signature Act, or e-signature. So it's something I've worked on a long time, and I think technologies we should always embrace and move forward.
Well, if confirmed, I hope that that's something that I can get your commitment to meet specifically on, because I'd like for us to make significant progress there. We really haven't, and I would appreciate your help and support and work with you on it should you be confirmed.
I look forward to that, sir.
Thank you. Thank you, Mr. Chair.
Thank you, Senator Tillis. Senator Warren from Massachusetts.
Thank you, Mr. Chairman, and welcome, Mr. Gensler. I remember your work at the CFTC, and I anticipate that you will show the same independence and courage as head of the SEC. So, as you know, the SEC's job is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. But it is falling down on the job. And so, since we're limited for time, I'm just going to pick 3 examples. The SEC is not requiring companies to make full public disclosure about climate-related risks. The SEC is letting companies leave their investors in the dark about predatory private equity practices. And as GameStop recently demonstrated, the SEC stands by while the stock market too often functions like a casino where the roulette tables aren't on the level. So let me go back through these. Let me start with climate risk. Mr. Gensler, is there any reason why companies should be able to hide their climate risks from their investors?
Senator, no. I think that particularly materiality is a point here, but no, they should not be able to hide their.
Okay, good. Now let me go to private equity. Mr. Gensler, is there any reason why a company that rakes in millions and millions of dollars from buying up small businesses and closing them down shouldn't have to disclose their general practices to their investors?
I think it's at the heart of the Investment Advisors Act that they would share their fees and any conflicts with their investors.
Well, their fees and I presume the overall business model, the approach they're using. Is that right?
Yes, a description of their business model to their investors. They're limited partners usually in that case.
Okay. And then finally, let me ask about the tilted roulette tables on Wall Street. if someone's been cheated by a broker dealer, hypothetically, for example, if Robinhood cheated individual investors, hypothetically, should that company be able to use forced arbitration clauses to avoid getting sued and held accountable?
I think, Senator, that while arbitration has its place, I think it's also important that investors, or in that case, customers, have an avenue to redress their claims in the courts.
Good. As you know, the SEC has the power to require disclosures that will be helpful to the investing public, like climate risk disclosures and private equity practices. And Section 921 of the Dodd-Frank Act gives the SEC the authority to prohibit the use of forced arbitration by broker-dealers when it is, quote, in the public interest and for the protection of investors. In other words, there we go. In other words, the SEC has the tools to make the markets function better. So if you are confirmed, Mr. Gensler, will you commit to picking up those tools and using them to make the markets more honest and more transparent?
Senator, if confirmed, I look forward to looking at all of the authorities, not just this one, but all the authorities to help protect investors, promote the capital formation and the efficient markets that we talked about. And this is an important authority that was vested in the agency, and looking at the economic analysis, working with fellow commissioners. I think we should look at all the authorities.
Well, I appreciate that. Congress has given the tools to the SEC. We just need the SEC to pick up these tools and use them. The SEC has been asleep on the job for long enough. It's time for the Commission to get up off its behind and protect investors and consumers. And I expect to see progress on all of these areas under your leadership. So thank you for being here, and thank you for your willingness to serve. Thank you, Mr. Chairman.
Thank you, Senator Warren. Senator Kennedy from Louisiana is here. I see his name. If not,
Mr. Chairman, can you hear me?
Mr. Kennedy, Senator Kennedy, yes, you're recognized.
Thank you. You caught me off guard, Mr. Chairman.
It's all right. It's hard to do. You.
Well, thank you. Mr. Chopra, am I saying your name right, sir?
Chopra, sir.
Chopra.
Chopra like Oprah.
I apologize. I want to ask you about our credit bureaus. Do you know what I mean by our credit bureaus?
I do, sir.
These companies collect data about whether we pay our bills or not, and they sell it to businesses. So businesses can decide whether to lend us money or extend us credit. Is that a pretty good description?
Yes, and increasingly they're using that data for much more as well.
But the credit bureaus make their money from the businesses. They don't make their money from the consumer.
That's correct. Consumers are the product, usually, not the customer.
So if as a consumer, a business reports a debt that I didn't pay to the credit bureau, the credit bureau is going to be less concerned about the accuracy of that information than they would be if the credit bureau was depending upon me as the consumer to pay their bills. Is that a fair assessment?
Yes, that's correct. And that's some of the big issues we're facing, not only when it comes to credit bureaus, but also the mass databases collected by big tech companies that are increasingly part of financial services.
Well, here's what I'm driving. Here's what I'm driving at, Mr. Chopra. Why would we not want to pass a bill that would direct the credit bureaus to establish a formal, easily accessible, efficient, and effective appeals process for a consumer? Let's suppose a business says you didn't pay a bill in the right amount and on time, and you disagree with that. It can really hurt your access to credit if that is reported to a credit bureau. Why wouldn't we want to tell the credit bureaus, look, you're going to set up a formal process to hear consumers out who think they have been wronged?
So, Senator, accuracy is critical for the credit reporting system to work, and there's too many consumers who have problems.
Yeah, but would you support a bill like that, Mr. Chopra?
Well, I would love to look at it, but I think the idea of making sure that consumers can dispute and get answers, that's part of the Fair Credit Reporting Act, but I would definitely like to make sure that consumers have more say in being able to fix errors.
Excuse me for interrupting. I know it's the law, but I don't think it's going to be properly effectuated until we put in a formal process and pass a bill and says to the credit bureaus, look, even though you don't get money from consumers, you're going to have to pay attention and listen seriously and attentively when they tell you you got bad information. Let me move to Mr. Gensler. Mr. Gensler, good morning. You were there in 08 and 09. You played a very critical role in our response to the meltdown. Why didn't anybody on Wall Street go to jail?
Senator Kennedy, I share your concern about that. We at the CFTC held folks accountable for rigging the interest rate market, for manipulating the currency markets. And
yes, sir, but why didn't anybody go to jail?
Those are questions I share with you, sir. I mean, I was responsible for running a civil law enforcement agency, and we every day brought the evidence, the law, and the facts together in front of courts and held people accountable.
I know, but who made the call? Somebody at Justice had to have said, we're not going to put these thieves in jail. Who did that?
Well, I think you're right that it's largely the Department of Justice, and these are hard cases to try, hard cases to piece together and show intent, or what I remember the term was called scienter in the Latin form, and but that's the Department of Justice, sir.
Yeah. Okay. I'm out of time, Mr. Chairman.
Thank you, Senator Kennedy. Senator Cortez Masto from Nevada is recognized.
Thank you. Thank you for this hearing. Congratulations, gentlemen, both of you, for your nominations. Mr. Gensler, let me just start with you in a follow-up to my colleagues' questions to you. During the foreclosure crisis, you weren't working at Justice at that time. Is that correct?
No, Senator, I was not.
And the agency that you were working at didn't have really criminal enforcement actions. Is that correct?
That is correct. As an attorney general of a state, you appreciate these distinctions, so I thank you.
Thank you. So let me ask you in an area that I know is a concern for all of my colleagues. As more individuals begin to engage with the financial markets through no-fee online trading platforms, I am concerned that investors may get in over their heads with large and complicated trades on apps that gamify the stock market. And we've seen the horrific results of that. So if confirmed, can I ask you, what steps would you take as chair of the SEC to protect investors who want to be involved in the stock market, but may be less knowledgeable about trading risks?
Senator, I thank you. I think that every day on the job, I'm going to be animated by working families and protecting investors as a key mandate of the agency. I think technology has provided greater access, but it also raises interesting questions. And the one that you mentioned about, quote, gamification is also raises these interesting questions about what does it mean when balloons and confetti are dropping and you have behavioral prompts to get investors to do more transactions on what appears to be a free trading app, but then there's this payment, behind the scenes, sort of this payment for order flow. And I think we're going to need to sort of study that and think about it. And what does this mean for our marketplace?
Well, I know many of my colleagues on both sides of the aisle are concerned about this, so we look forward to working with you moving forward. And let me just touch on one issue that was brought up, this idea that diversity and inclusion and equity in corporate America is somehow a quota. It is not a quota, and that's the problem we have here. And I think my goal and many of my colleagues, and this is why we support NASDAQ's proposal to increase transparency into the composition of the boards of exchange listed companies, is because we need a paradigm shift. We need a cultural change. It's not a checkbox. It's not a quota. And I think we have heard from my colleagues the importance of why this is a benefit to our companies. Because of the McKinsey published studies, we know that this really is a benefit to the companies long term, including when it comes to their profits, when they are actually really engage in diversity, inclusion, and equity. So I want to make sure you know that. Many of my colleagues supported what NASDAQ is doing in this space. So please be aware of that. Mr. Chopra, I know I don't have much time, but thank you also for your willingness to serve. So we have talked about this. I am a strong advocate for restitution for harmed consumers. Not only should we provide relief to people who are overcharged or misled, but we should discourage the bad actors from continuing that deceptive practice in the future. And I have made it very clear, I was concerned by CFPB's enforcement actions under the previous administration, which failed to provide restitution for consumers. So could you elaborate on your views on providing restitution for people who really were dealt with unfair, deceptive, and abusive practices?
Yeah, so Senator, when victims of fraud and misconduct are not made whole, that doesn't just hurt them, it also hurts every other business who is trying to follow the law and treat them the right way. I have pushed hard against the FTC's approach of these no money, no fault settlements in egregious fraud. It is something that economically just does not make sense. When you rip someone off and don't have to pay them back, how is that really much of a sanction? So restitution is a critical part of the CFPB's law enforcement work in order to make victims whole as Congress intended.
Thank you, and I appreciate that that position. I've only got a few minutes left. The other area that I would love to work with you on, and we've talked through many, but for our small businesses, what in general do you see the role for supporting our small businesses through the CFPB?
Well, I think a lot of our regulators and agencies need to make sure that there is not unlawful practices in small business lending at the FTC. We've taken action against companies that have even threatened to break small business owners' jaws if they did not pay it back. At the CFPB, Congress has asked the agency to implement a small business data collection. I do think enforcing the law to protect small businesses is absolutely critical right now. Small businesses are facing extinction. I've worked with you a lot, Senator, about issues facing franchisees. We have to make sure that the bedrock of our community of small business does not go away after this pandemic. That's absolutely critical.
Thank you. Thank you, Mr. Chair. I know my time is up.
Thank you, Senator Cortez Masto. Senator Haggerty, I believe, is here.
I am.
Okay, Senator Haggerty.
Mr. Chairman Brown.
You're recognized.
Chairman Brown, thank you. Ranking Member Toomey, thank you as well for holding this hearing for two very important regulators in our financial regulatory landscape. In America, our financial markets, as Senator Toomey rightly noted in his opening remarks, are the envy of the world. I was just on a call with our bankers in Tennessee who were expressing their concerns that we maintain that strength and that we be certain that we not allow regulators to use the regulatory construct in the financial markets to backdoor social policies that could have an adverse impact on our economy and are frankly much better addressed in other arenas. We have a very rapidly evolving technology landscape. We have new market entrants coming aboard, and we certainly should not take America's market leadership for granted. I think all of us want to maximize our economic recovery, and it's certainly important not to use ideologically driven regulatory practices at a time when we need to see our economy open up. My first question is for Mr. Gensler. And Mr. Gensler, we've discussed this before, and you know I'm concerned very much about arbitrary and capricious, potentially overly reaching regulatory rulemaking. And you and I talked about the importance of cost-benefit analysis. I know that you talked about this with others on the committee, but I want to just highlight again our discussion about taking an economic approach, as you've described, and the great importance of utilizing cost-benefit analysis moving forward. But moving into another arena, I want to compliment you on the undertaking that you've had in digital assets. The role that you played at the MIT Media Lab, I think, is going to be very instructive here. And if we think about the area of financial regulations in such rapidly innovating markets, I think it's very challenging from a regulatory standpoint to manage that type of environment. To put it another way, using a Tennessee terminology, you don't want to be shooting where the rabbit was. My question to you, Mr. Gensler, and it's an open-ended one, if you could share your perspective on the SEC's role under your leadership, if you're confirmed, in how you will approach digital assets.
Senator, I thank you for that opening. I share your thoughts. It's always important to update our market oversight to new technologies, but I believe foremost to be technology neutral. And I say that because if there's new technology and of cryptocurrency and potentially central bank digital currencies comes along, that it's important to stay true to our principles of investor protection and capital formation, but at the same time be technology neutral. So I think that at the SEC, it's really to the extent that somebody is offering an investment contract or a security that's under the SEC's remit, and they have exchanges that operate there, then we have to make sure there's investor protection. If it's not that, it's a commodity, as Bitcoin has been deemed to be, then it's either a question for Congress, how Congress would want that to be overseen, or it's possibly a question for the Commodity Futures Trading Commission. But I would work with the staff, I'd work with fellow commissioners and see how we can move forward, and to the extent investors can be protected and invest in these markets that they're allowed to do so, but to do so in, again, the core function of investor protection and capital formation.
I appreciate your cognizance of your jurisdiction and also, and importantly, the role of the Congress in overseeing this and dealing with it. This is an area where I think we have great potential for leadership if handled right. And I think we should be very careful not to have too heavy a hand, but bringing your experience and your expertise to bear, I think you can make a significant mark in this rapidly evolving market. And I want to make certain that we take the right touch and the right coordinated approach between our legislative oversight and the role that you'll play, if you're confirmed, running this important independent agency. Thank you.
Well, I thank you. And if I can appropriate your line about not shooting where the rabbit was, I thank you for that too.
Tennesseans all understand that, Mr. Gensler. Thank you.
Thank you.
Mr. Chairman.
Sorry, Mr. Gensler, I've already appropriated it, sorry. Thank you, Senator Hagerty. Senator Van Hollen from Maryland.
Thank you, Mr. Chairman and Ranking Member, and congratulations again to Mr. Chopra and Mr. Gensler on your nominations. And if I'm not able to get to the second round, Mr. Chopra, I will submit some questions for the record. Mr. Gensler, you and I had a chance to speak before this hearing, and I raised some concerns and some specific legislation I've introduced that I consider sort of SEC good housekeeping principles. One's a bill that I've introduced with Senator Fisher around 10b5 plans. The other one deals with the 8K trading gap. Both bills are intended to provide investors and the public with confidence that CEOs and other insiders are not taking advantage of insider information. And my question for you today is, will you commit to working with me and providing technical assistance as we work to pass these bills?
Senator, I wanted to start by just thanking you for that warm introduction about an hour and a half ago to the committee, because you and I have known each other about 20 years, and that was very kind of you. But yes, I look forward, if confirmed, to work with you and your staff providing technical assistance and having the staff of the SEC help as well.
Right. I think we've seen many stories, and there may even be ongoing investigations into some of reports about insiders gaming the system. Right now, the rules allow too much gaming, and so I intend to work with you to close those loopholes. Let me go back a little bit to the questions that Senator Toomey and some others have referenced regarding corporate disclosure rules and materiality, what kind of information they provide to shareholders. You cited the Supreme Court standard regarding a reasonable investor and what a reasonable investor would want to know. And of course, that information changes over time, right? I mean, 20 years ago, we wouldn't necessarily see climate change risks as something that is essential to the success of a particular company. Would you say it's important for the SEC to keep an open eye to the evolving interests of the reasonable investor to ensure that the disclosure rules match their demands for information?
Yes, Senator, and I think that the importance here is that, and it's the courts have helped define this, that it's the investor community that gets to decide what's material to them. It's not a government person like myself. It's all about that reasonable investor. Do they think it's significant in the mix of information? And so I'm going to be guided by that. And I concur with you. In 2021, there's tens of trillions of dollars of invested assets that are looking for more information about climate risk. And I think then the SEC has a role to play to help bring some consistency and comparability to those guidelines.
And with respect to corporate political spending, I mean, Senator Toomey, I think, gave the example of how that spending may represent a small fraction of a company's assets. But wouldn't a reasonable investor, or isn't something we should look into, whether a reasonable investor believes that there's a reputational risk to a company if they're spending secret money in politics and that becomes known and revealed? Isn't reputational risk something that a reasonable investor might consider?
Right. I think, Senator, you're correct that it's what is a reasonable investor think is in that mix of information. Would they buy a stock, sell a stock, or a bond, or vote yes or no? And it's up to those investors. And then to work to help provide some guidance to issuers as to provide that information in that context.
Thank you. Now, in addition to serving on the Banking and Housing and Urban Affairs Committee, I now chair a subcommittee on the Appropriations Committee that oversees financial services in general government, the FISG subcommittee. And in 2016, the GSA submitted, with approval from the SEC, a prospectus to Congress to authorize a lease for a new headquarters facility for the SEC in the District of Columbia. That prospectus was formally approved by the House and the Senate Committees of Jurisdiction in 2018. Congress has also appropriated $263 million to the SEC for the headquarters move. If confirmed, will you transfer the appropriated dollars to GSA so the headquarters project can advance?
Senator, as we discussed in some private meetings, if confirmed, I would work with the SEC staff and GSA to better get up to speed on this. I know it's an important matter that you've raised. I've not been yet briefed on the matter because it's confidential negotiations between GSA and various potential real estate options, as I understand it.
But you would agree that it's important for the SEC to, follow the direction that Congress has provided here.
I would agree that it's always important, not just on real estate, but also on other mandates from Congress to follow congressional will.
I appreciate that answer, and this is a case where I think, Congress has spoken. Thank you. Thank you to both our nominees. Mr. Chairman, thank you.
Thank you, Senator Van Hollen. Senator Lummis from Wyoming.
Well, thank you, Mr. Brown. I have questions in this round for Mr. Gensler, and it's nice to see you again, Mr. Gensler. In some quarters, the SEC has a reputation for being a black hole for innovators. Do you agree that we need to provide more legal clarity through rulemaking and no action letters to innovators in the digital asset space and in the blockchain industry specifically?
Senator, I thank you. I thank you for our conversation in the last week on these matters and others. I do think that technology and markets constantly change and evolve, and that it's important for the SEC to provide guidance and clarity. Sometimes that's a clarity that will be thumbs up, but even if it's thumbs down, it's important to provide that, whether it's through guidance or no action letters, as you mentioned.
I don't know if you're aware of this, but Wyoming was the first in the U.S. to enact consumer protection laws for digital assets, including virtual currency. That happened in 2019. What are some of the ways we can work together to ensure consumer protection for digital assets that doesn't also hamper innovators?
Senator, I was aware. I think that your legislature and governor enacted 13 separate acts in the digital space in Wyoming. I think it's important to protect consumers and investors. One area of consumer protection is around the custody of their funds, digital assets. The actual ownership relies on something called a private key in cryptography, and ensuring that that's really that custody works. And I know Wyoming has looked at that, New York, some other states. I believe actually South Dakota may have as well. I hope I didn't leave out any of the member states. But I think also investor protection, which goes beyond just the custody of assets, but to ensure that these markets are free of fraud and manipulation. And I think that's the greater challenge, frankly, because there has been the markets for some markets usually operating overseas, but some markets have been really rife with fraud and scam. So trying to protect the investors against that fraud and manipulation.
Now, in 2018, you said in front of the House Agriculture Committee that blockchain technology has real potential to transform the world of finance. Could you talk more about how this technology can promote financial inclusion and reduce risk and create new markets?
Well, I think it's already doing some of that right now, that it's been a catalyst for change. Central banks around the globe are really looking at how to provide more inclusive payment structures, more inclusive payment tokens. And so that's in one area as a catalyst for change, but it's also other payment system providers are looking to say, how do we provide payment systems that operate 24 hours a day, 7 days a week, and at lower cost, both cross-border and domestically. Blockchain technology itself is a shared accounting system, if I might say. And I think that's also led to some new thoughts about how to do trade finance and even medical records technology and the like. So I teach it. I'm neither a maximalist nor a minimalist, but I think that it's really been a catalyst for change in numerous areas.
Well, I have a lot to learn about blockchain itself. My only understanding of it is the application of Bitcoin, but it'll be interesting to see how it's useful in other areas and can be done in a way that actually saves money. I'm going to switch subjects quickly to energy. You've proposed a greater focus on environmental issues as part of your regulatory portfolio. My state of Wyoming's economy is heavily dependent on the energy sector, and our state government revenues especially. Because of that, our state government revenues are declining right now, dramatically declining because of the change in focus in our energy economy. Have you considered the practical impacts on Wyoming's economy by making it more difficult for energy companies to raise capital?
Well, Senator, I think that the disclosure regimes of climate risk that we were discussing earlier actually can be pro-issuer, pro-corporation, and pro-investors. Investors, from time to time, change the information they would want, and what they're just asking for more is about material climate risk. The climate risk that the investors see is material. And I think that can be also pro-issuer, pro-energy company to get some consistency, comparability, some clear rules as to how to do this. Right now, we have a little bit more of investors are asking for it, and issuers aren't entirely sure how to address all those. So I think it's pro-energy company to do such disclosures.
Thank you, Mr. Gensler. Mr. Chairman, I yield back.
Thank you, Senator Lummis. Senator Smith from Minnesota.
Thank you, Chair Brown and Ranking Member Toomey. And I want to just welcome Mr. Gensler, Mr. Chopra to the committee. It was really wonderful to have a chance to visit with you a little bit over the last few weeks. I think you both bring outstanding credentials and experience to these roles, and I look forward to supporting your confirmation. So thank you so much for being with us. I want to just start with Mr. Chopra. And I want to talk with you a little bit about the issue of student loans and federal student loan servicing, if we could. So prior to the pandemic, I heard from a lot of Minnesotans, this is an issue around the country, with struggling to pay their student loans and struggling especially to get into and then stay enrolled in income-driven repayment plans and the public service loan forgiveness program. And these are teachers and firefighters, people that are interested in public service. I'm really grateful that the Biden-Harris administration has put federal student loans on pause until September, and I'm very concerned about the ongoing challenges that we have related to getting good quality student loan servicing. So, Mr. Chopra, we know that it's essential for student loan servicing to be done well so that borrowers are able to access critical programs like the Student Loan Forgiveness Program. And I'd like to hear your thoughts about this. What can we do to ensure high quality federal student loan servicing? And how will you approach oversight to this? And what can the Consumer Finance Protection Bureau do to protect student loan borrowers and ensure access to important programs like these loan forgiveness programs?
So thank you, Senator. One of the things that I've always kept front and center is it is critical for regulators not to make the same mistakes that were made in the lead up to the financial crisis. The costs of inaction were too high, and some of the same issues that we saw in the mortgage servicing market, I think, were creeping into the student loan servicing market years ago. There are many benefits, many programs, many contractual entitlements in a borrower's loan note that they are eligible to enroll in. And if servicers or debt collectors are misrepresenting those options, that is a big problem. With respect to the Public Service Loan Forgiveness Program, many members of the military, teachers depended on that when making their own career decisions. So it's critical that loan servicers live up to their obligations. I understand there has been some improvement when it comes to how this servicers are performing. We are at a critical moment when so many borrowers are going to have to restart their payments, and servicers communicating and making sure that borrowers can navigate their options. And it's all done lawfully. That is very critical. And the CFPB has a big role to play in working with the Department of Education, state attorneys general, state licensors, to make sure that all of that is happening lawfully so we can avoid an avalanche of defaults when any moratorium might end.
I really appreciate that. I couldn't agree with you more. I think that we face some major long-term fallout from this pandemic, including student loan issues, including housing issues. And I think particularly my heart is with people who feel like they were trying to do everything right. They were following the rules as they understood them. And then it feels like these student loan services are just pulling the rug right out from under them. And this is a classic moment where we need more energy and more oomph behind those that are protecting consumers, especially folks that are looking for ways to make a contribution through public service and then have that rip right out from under them. So thank you very much.
Yes, and just to add one thing, so many people are entering a very tough job market, and they're also leaving school with an enormous amount of debt. And we've seen when you enter a tough job market, it can be hard to stay afloat, and people fall financially behind. We need to make sure they don't default and start off their financial lives, with more trouble, foreclosing the ability to maybe get a home. Or start a small business. We need to make sure the law is being followed.
Exactly. Thank you. Thank you very much. Mr. Gensler, I'm about out of time, but I just wanted to thank you for your responses to questions of several of my colleagues about the importance of providing some sort of a standardized and mandatory system for laying out systemic climate risks. I think that this contributes to transparency for investors, as you suggested just a moment ago in your response to Senator Lummis, and I think that it also helps us to really understand what the systemic risk is to asset valuation as well as to financial markets. So thank you very much for that. And I have one thing that I'm going to follow up with you on, having to do with an issue that is important to a group of people who care about new registration forms for indexed linked annuities. And I'll follow up with you on that. You and I had a chance to talk about that a little bit. Thank you, Mr. Chair.
Thank you, Senator Smith. Senator Moran, I believe, is not here. Has Senator Kramer arrived yet? And has Senator Daines arrived yet? And Senator Sinema is not
Mr.
arrived.
Chairman, this is Senator Daines.
Okay, go for it, Steve.
Okay.
Senator from Montana is recognized.
Great. Thanks, Mr. Chairman. Appreciate it much. So I want to talk about the issue of this proxy advisor duopolies. As you know, proxy firms provide a variety of services to shareholders. Most notably, they provide advice to vote their shares at shareholder meetings, typically publicly traded companies. There's two dominant proxy firms. There's International Shareholder Services, ISS, and Glass Lewis. They control about 95% of the proxy advisory industry, which really constitutes a duopoly that's become the de facto standard setter for corporate governance in the U.S. without any meaningful input from shareholders or issuers. This is an area that's attracted bipartisan attention in the past, most notably through the House passage of the Corporate Governance Reform and Transparency Act. A similar version was sponsored by Senator Reid and other current members of the committee, including Senators Tillis and Kennedy. So this is a question, Mr. Gensler. Are you concerned about this lack of competition in the market for proxy advisory services, and concerned that some proxy advisory firms may have significant conflicts of interest, which may impact the objectivity of the voting recommendations?
Senator, thank you, and thank you for taking some time last week for our discussion. I do think that in all parts of the capital market, whether it's proxy advisors, whether it was the earlier question about credit rating agencies and so forth, competition is a good thing to bring about transparency and lower cost and more efficiency. So I'd share that even in this space too, as well. I think that it does bring efficiency to many pension funds to have proxy advisors. It's a service that helps pension funds and investors through the proxy season. And you also raised conflicts. I think it is the role of an agency like the SEC to try to, through transparency and other rules, try to address potential conflicts of interest. And we saw some of these before the 2008 crisis in the credit rating area. And I know that the commission has attempted to do that through some rule writing last year in the proxy advisor space. But I do think they bring some efficiency and help a lot of pension funds through what otherwise would be a hard slog to consider 3,000 votes or something in the course of just a few weeks.
Thank you. You know, you said earlier in response to a question that you have some concerns about one firm having 40-50% of the payment for order flow retail. For example, ISS has both a research and a consulting arm. Do you think the SEC has a responsibility to ensure that the proxy advisory systems function properly and that investors receive the most accurate as well as most up-to-date information prior to voting proxies?
I think that as the SEC did it last year, address proxy advisors, it's within the authorities, and it's something that if confirmed, I would work with the staff and my fellow commissioners and with you to see if there were things that were yet to be addressed that need to be addressed. But I also think they provide an important role in the markets during the proxy season.
Thank you. I want to shift to enforcement actions. I've been concerned the SEC under past commissioners has based enforcement actions on previous settlements and staff guidance. In your opinion, how should the SEC's enforcement division decide whether to engage in enforcement action, and when would the issuance of guidance or rulemaking might be more appropriate?
Well, I was honored to chair another agency, a civil law enforcement agency, smaller, but still very important to the markets. And I think of it as enforcement. It's following the facts and the law where the facts and the law take you, but it's to stamp out fraud and manipulation in the markets. And it's to use limited resources to effectuate where there's the greatest problems in the market.
Citizens. Enforcement program. We've got a lot of problem with schemes in Montana that affect our seniors.
It's a very important. Those less able to protect themselves need the SEC even more.
The Ponzi schemes as well, going after Ponzi schemes.
Yes.
You commit to enforcing there?
Yes, we did at the CFTC. I will if confirmed at the SEC.
Okay. Thank you. Thanks, Mr. Gensler. Thanks, Mr. Chairman.
Thank you, Senator Dane. Senator Ossoff from Georgia.
Thank you, Mr. Chairman. Thank you to our nominees. Mr. Chopra, the largest investment banks are very heavily subsidized, and many would argue these massive financial institutions are dominant not because they're efficient at capital allocation or risk management or because they offer the best products to consumers, but instead because they receive trillions in government bailouts, low interest loans, and quantitative easing. Do you agree with this assessment, and is this, in your view, a form of regulatory capture?
Well, Senator, too big to fail is a huge problem that Congress sought to fix in Dodd-Frank, and we should continue to make sure that that happens. We want competition on the merits. We want to make sure there's a market structure where small banks, small financial institutions can compete fair and square. And it's not fair if they can't. And our regulators need to be attuned to every single consumer and institution, not just the largest ones. I deeply believe that.
Appreciate that, Mr. Chopra. And building on that theme, during this pandemic, much like during the crisis in 07-08, the 12 or 13 largest banks have received trillions in emergency cash. It's provided on an overnight basis, and there are no such instantaneous emergency cash facilities for credit unions or regional banks, let alone ordinary people who have had to wait months for stimulus checks. And I would note that many members of Congress who currently oppose sending cash to ordinary people in a pandemic raise no concerns about the massive scale of cash and cheap loans provided to Wall Street banks. Why is it so much easier for major banks to access emergency financial support in a crisis, and how could we level the playing field?
Well, Senator, you're right. Small businesses, households did have a tougher time getting a lifeline of support. And I know that that was a struggle. You know, one of the things that our Federal Reserve Chairman has talked about and others is modernizing our payment system so that we can have a more real-time system. We cannot be falling behind other countries. We see that China is in many ways investing in faster payments, in a stable coin. These are things that will help consumers and businesses get money faster to their benefit. And you know, I strongly support the Fed's efforts to modernize that payment system so that everyone can have equal access.
Thank you, Mr. Chopra. And I would note that the Retail Payments Office of the Fed is based at the Atlanta Fed. I want to ask you now about financial technology. We saw this week a report that Walmart has hired 2 former Goldman Sachs executives, and Walmart's investments in fintech signal an interest in expanding the provision of financial services to its massive customer base. On the one hand, more competition could benefit consumers. On the other hand, there are looser regulations for industrial loan companies, which could threaten financial stability, and the entry into the banking sector of a retail giant like Walmart could raise antitrust concerns. What are the implications for consumers and for regulators of these developments in digital banking, of the prospective entry of Walmart into the banking sector, and how can policymakers address them?
So, Senator, while this is not a core issue of the CFPB, it's something I've thought about quite a bit in my current role at the FTC. We have seen how large technology platforms are increasingly entering financial services. Facebook's Libra proposal drew a lot of scrutiny from this committee as well as regulators all over the world with respect to how it might impact privacy, fair competition, and even compliance with our money laundering laws. So I do think we have to make sure we're looking at the issues that are facing our country today, but also these other issues coming down the pike when it comes to market structure. I don't want to see a banking system or financial services system where new market entrants cannot get in, cannot compete, and win the day. Dominant players should not be able to squelch out competition, and that's something we need to always be mindful of.
Thank you, Mr. Chopra. Mr. Chairman, I yield back.
Thank you, Senator Ossoff. That concludes the first round. The second round, a number of members on both sides would like questions. I think that I will start, but I think that Senator Ranking Member Toomey has asked that Senator Scott be the first Republican called on. So, Tim, I will call on you after my. I will not go the entire 5 minutes, and I will more strictly enforce the 5-minute rule too. We are fairly liberal. Pardon the adjective there, Senator Scott, but fairly liberal with enforcement, but we will not be this time. Mr. Gensler, companies and investors have acknowledged the need for improved and consistent climate risk disclosures. The SEC last addressed this in 2010. Acting Chair Lee has recently undertaken a review of the earlier guidance. Mr. Gensler, are you going to do more than that?
Chairman Brown, as we've discussed in this hearing, I think that increasingly investors really want to see tens of trillions of dollars of assets behind it, or want to see climate risk disclosures. I think issuers would benefit from such guidance. So I think through good economic analysis, working with the staff, putting out to the public to get the public feedback on this, this is something that the commission, if I'm confirmed, I would work on.
Thank you. Commissioner Chopra, one question for you. The past few years, we've seen a lot of changes in consumer finance markets. Companies are increasingly offering consumer financial products through mobile apps or using new methods of underwriting, such as relying on alternative credit data or algorithms that use artificial intelligence. What are some of the most significant developments you've seen in consumer finance? And what do you see as new risks to consumers from these developments, Mr. Chopra?
So, Senator, technology will play such an important role in our lives in every sector of the economy. But we also need to understand more clearly how mass data collection on all of us is impacting our privacy, the security of our data, and ultimately the decisions made by these algorithms. I think there's real questions about transparency. I've noted that there are many types of algorithmic decision-making where simply people are unable to ascertain why a certain decision has made. It has raised questions about discrimination, as evidenced by Secretary Carson's complaint against Facebook in the housing context and so many others. So looking at how big data, particularly by large platforms who have detailed behavioral data on all of us, is something we must carefully look at, because it will change financial services fundamentally, and we need to make sure that we have a vibrant and competitive market, and not one that is simply dominated by a few.
Thank you, Commissioner Chopra. Before turning to Senator Scott, I want to enter into the record letters of endorsement from a bipartisan group of 26 state attorneys general, veterans, and military service organizations, as well as a broad coalition of civil rights, consumer, and housing organizations in support of Mr. Chopra's nomination, and letters from investor protection advocates, state regulators, and investment professionals in support of Mr. Gensler's nomination. Without objection, they are entered into the record. Senator Scott from South Carolina for the second round.
Thank you, Senator Brown. And Senator Brown, I noted your comments about liberalism and conservatism. I'll just note that even if it's just the amount of time that we each get for asking questions, anytime you move towards the conservative aisle, I'm happy to see that kind of movement from you, sir. So thank you very much for sharing those enlightening comments with me. Mr. Chopra, to you, sir. This is an easy question, I hope. Do you agree that Congress did not provide the CFP regulatory oversight authority over insurance products and the insurance industry?
Yes, sir. That's an explicit exclusion from Title 10 of Dodd-Frank. The CFPB does not have authority over, I believe it's firms regulated by state insurance commissions.
Yes, sir. And as an old insurance guy myself, I am really impressed with the level of integrity and success that we've had in the state regulated insurance industry, and I hope that we are able to maintain that equilibrium as we move forward. Another question for you, sir, is I'm confident every senator here today supports responsible consumer protections and a robust, transparent marketplace of consumer products and services. I'm also certain that every senator present would agree that regulated entities should have the right to know what the rules of the road are before being charged with breaking them. Unfortunately, when the CFP was first established, its leadership quickly established that enforcement, rather than clearly articulated rules for regulated entities, would be the primary mechanism for protecting consumers. The CFPB's frequent use of enforcement and supervisory authority as an extension of rulemaking had a chilling effect on the marketplace as firms began to exit certain business lines rather than risk running afoul of the Bureau's vaguely defined and constantly shifting standards. So my question, sir, is if confirmed, will you strongly commit to the continued improvement of overall transparency, efficiency, and effectiveness of the CFPB's supervision and enforcement programs?
Yes, and I also will commit that the CFPB and every federal agency should be focused on fixing harms, making it clear to market participants what's expected of them. Ultimately, that is what creates a vibrant market, and that is something that the CFPB must do, adhering to all of the procedures Congress has laid out. That I am absolutely committed to.
Well, thank you, sir. My last question, understanding that the conservative nature of the time remaining is important, Chairman Brown. There's no doubt that the availability of responsible small dollar credit is essential to millions of Americans and plays a key role in helping consumers weather temporary cash flow imbalances, unexpected expenses, or income shortfalls during really challenging times like the pandemic that we're coming out of. In acknowledgement of that, CFPB, FDIC, FRB, NCUA, as well as the OCC issued a joint policy statement at the outset of the COVID-19 emergency that encouraged financial institutions to offer responsible small dollar loans to both consumers and small businesses. In the years since that statement was released, CFPB and other financial regulators have taken a number of positive actions to facilitate the ability of financial institutions to more effectively meet the small dollar credit needs of their communities and their customers. As director, what actions would you take, both independently and in coordination with other financial regulators, to encourage the availability of and access to a wide variety of credit choices for consumers?
So, Senator, I want to work closely with all of those agencies you've mentioned, and including the National Credit Union Administration, which has its own small dollar rubric. I also want to make sure that it's more than just access to credit. It's also about access to one's money. The faster consumers can control their money, and sometimes they have to wait days and days for it, that makes it harder for them to make ends meet. I referenced to one of your colleagues the importance of us having a modernized payment system. All of these actions will make it easier for consumers to have control of their own destiny and ultimately lead a strong financial life.
Thank you, sir. With 7 seconds left, let me just say to Ranking Member Toomey, thank you for the time. Chairman Brown, have a good day.
Thank you, Senator Scott. Senator Warren is next. I see her screen is open, but I don't see her. If she's not here, she is here. Senator Warren, you're next for 5 minutes, and we're enforcing the 5 minutes more strictly this round. So thank you.
Where is...
Senator Warren, or should we?
I see her. I'm sorry, Mr. Chairman, I couldn't hear you. So thank you. Commissioner Chopra, congratulations on your nomination. You have been a longtime advocate for consumers, and I have no doubt you are the right person to lead the Bureau at this moment. But you have a big task ahead of you. The last administration's appointees acted like they worked for the giant banks that they were supposed to regulate. So it's clear that the Bureau needs to return to its core mission of protecting consumers. So I want to ask you about your plans for one of the areas where the past leadership of the Bureau failed the most, and that's enforcing the fair lending laws that are designed to protect consumers from discrimination. In 2017, one of the very first things that Mick Mulvaney did when he took over as acting director was to gut the Bureau's Fair Lending Office and strip the attorneys of enforcement power. And no surprise, enforcement actions plummeted. So can you talk about your own plans for holding banks and financial companies accountable for discrimination?
So, Senator, thank you. I don't think this is just a problem at the CFPB. The FTC, where I work, did not file a single enforcement action on the Equal Credit Opportunity Act for years and years. I don't believe agencies should nullify Congress. We should enforce the laws that have been delegated to us. And it is particularly important when it comes to anti-discrimination. There are new ways in which financial institutions are using behavioral advertising, new forms of data collection, and we need to make sure that we're offering a robust way to understand how they can comply and hold them accountable when they're not. Our Fair Lending and Equal Opportunity Office at the CFPB, I had a chance to work with them the last time I worked there, is established by Congress, and it should play a critical role in making sure the law is being followed and meeting the objectives set out in the Act.
Good. Well, I'm very glad to hear you say that, Commissioner Chopra. And You know, because the whole problem of discrimination in financial services exacerbates racial wealth inequalities, and I'm glad that you're going to make this a priority. It is long past time to send a signal to Wall Street that the Bureau is not going to turn the other way and look away when big financial institutions discriminate against Black, Latino, Asian, and Native customers. So thank you for that commitment. I also want to talk about the upcoming housing cliff that is facing millions of Americans. During the 2008 financial crash, financial regulators focused on helping banks and turned their backs largely on American families. The result was that about 10 million families lost their homes, with that burden falling heaviest on families of color. In response, the Obama administration established the CFPB to make sure that never happens again. Now, fast forward to the COVID-19 pandemic. Forbearance measures have staved off a similar wave of foreclosures, but those protections are not going to last forever. The good news is that unlike 2008, we now have an agency that is dedicated to putting consumers first. So let me ask you, Commissioner Chopra, can you explain the urgency of the current crisis and how you plan to use the Bureau's tools to prevent the mistakes that were made during the Great Recession from just happening all over again?
Well, thank you, Senator. I'd be remiss if I did not acknowledge the role you played in the establishment of the Bureau. And I know something, I've spoken with you and many others on this committee, is that what happened in the mortgage market in the years leading up to Lehman and the foreclosures that took place after, we have seen report after report after report about how devastating that was to families, to their future, to our economy, and it impacted our entire financial system. So we have the CFPB. It has been entrusted to monitor those mortgage markets, work side by side with each other regulator, work with states, and use the tools in the toolbox to spot those risks. And while Congress has hit pause on many of the troubles in the mortgage market, we are not out of this based on the data that I look at. Many families are going to struggle. They have lost income. They may not be able to resume. And we should make sure that they can stay in their homes when they have that ability to do so, and not be deceived about what their options are. No one should be kicked out during a quarantine, particularly if they've been lied to. I really believe that strongly.
Well, I agree with you. Thank you very much, Mr. Chairman.
Thank you, Senator Warner.
Thank you,
Senator Warner and Commissioner Chopra. Senator Ranking Member Toomey in the second round.
Thank you, Mr. Chairman. Mr. Chopra, while the CFPB director is now finally removable by the president, the CFPB remains unaccountable to Congress in the sense that it's not subject to the appropriations process. In a 2016 interview at the University of Pennsylvania, you were asked about proposals for making the CFPB subject to appropriations or making it a 5-person commission. At the time, you said that congressmen who vote for these policies must be perceived as, quote, shilling for predatory lenders, end quote, and that, quote, supporting gutting the CFPB like that by starving it of resources or creating structures that don't allow it to do its job, there's no real good argument for it other than representing those who are essentially breaking the law, end quote. Well, in fact, Mr. Chopra, I and many of my colleagues have long and continue to support the policies of the ability to remove a CFPB director by the president, making it accountable to Congress by making it subject to appropriations. And for me, it's about accountability. So let me ask you, is it still your view that my colleagues and I just want to shill for, quote, predatory lenders and represent lawbreakers?
No, Senator, but when it comes to the banking regulators, the comptroller of the currency.
I just want to be clear that so you are retracting what you said back in 2016?
I'm happy to look at that. If I said that, I think many people's concerns about accountability are principled. And it is certainly not the case that everyone is just doing the bidding. I regret that if I said that. But ultimately, I do believe that independent agencies are able to stay more clear of political influence, are able to exercise judgment carefully, and the comptroller of the currency and others, I do believe that this
I understand that you could disagree with the opinion and the conclusion about the best mechanism for accountability, but I'm glad to hear that you are retracting the impugning of the motives of those of us who feel as we do. And I'd be happy to provide the video for you if you have a question about whether that's accurate. Let me ask you this. Last year, the CFPB affirmed that supervisory guidance does not have the force or effect of law. And this year, it issued a rule to codify that principle. So I certainly welcome this commitment to the rule of law, especially in light of the CFPB's troubling past practice of taking enforcement action based on supervisory guidance. I think in our previous conversation, you agreed that with this step taken by the CFPB, I just want to be clear, are you committing to complying with this law, with this rule, or do you intend to revisit and attempt to change this rule that was passed this year to codify that principle?
Yeah, so Senator, I appreciate the question. Guidance does not have, cannot impose obligations. That is not the appropriate way in which new laws are created or is outside of the regulatory process. I understand your concerns, but I have not read that rule very specifically. But supervisory guidance is really supposed to be there to help institutions be able to understand how to best comply. It can cover sometimes emerging issues that provide guidance.
Yeah. Now,
but I agree with.
This is about sticking with the rule that codifies the principle that guidance can't act as a rule. Let me. My last question here has to do with the indirect auto lending. This was an egregious example of the CFPB's enforcement crusade, and it specifically relied on a very controversial disparate impact theory, and it was issued by a supervisory bulletin rather than a proper rule. The GAO confirmed that the CFPB's bulletin functioned as a rule and was therefore subject to the Congressional Review Act, and Congress, as you know, overturned this misguided policy. Now, when you and I spoke last week, I asked you if you intended to reopen the issue that Congress had closed through the CRA and create some new version of an auto lending rule premised on the disparate impact theory. And I think you said you committed to me that you would not do that. Did I have that right? And will you confirm that commitment today?
The Congressional Review Act resolution has nullified that guidance document, and the CFPB will continue to adhere to that if I'm confirmed. And I will continue to monitor any of these concerns you have to work with you further. But that has been nullified, and that is now the law.
Okay.
Time has expired. Thank you, Senator Toomey. Senator Warnock of Georgia, you're recognized for 5 minutes.
Thank you so very much, Chairman Brown. It's great to be here with you, and let me say how excited I am to be named chairman of this committee's subcommittee on financial institutions and consumer protection. I look forward
to too. Thank you.
Thank you. I look forward to working with you and Ranking Member Toomey, I'm sorry, and the subcommittee's Ranking Member Senator Tillis to ensure stability in our financial markets and to protect consumers. Commissioner Chopra, thank you so much for appearing before this committee today. As I travel across Georgia, I'm hearing a lot, and I heard a lot during my campaign, from student loan borrowers. And that's a story I know personally. I'm the first college graduate in my family. And I wouldn't be here were it not for Pell Grants and low interest student loans. but students who are borrowing money now are just getting crushed under the debt load. And the student loan burden has real implications, not only for the borrowers, but for our economy. People are not able to buy homes, start small businesses, the kinds of things that move our economy forward. And of course, this is disproportionately impacting Black and brown borrowers, particularly Black women. I know that you previously served as a student loan ombudsman at the Bureau. And what I would like to know is this: as director, what would you do to protect student loan borrowers from predatory student loan companies, servicers, and debt collectors, and where are the places and opportunities for real reform?
So, Senator, I'm glad you mentioned this because I really think about the problem you raise as a double whammy. For many people of color, families of color, they're more likely to need to borrow to go to college, and then in many cases, after graduating, continue to face a wage gap. In many cases, the data has showed that African American females with college degrees have not really seen their wages go up, even after all of that studying, and that means that the debt that they bear is even more difficult to service. So there's a lot of problems in our student loan system when it comes to schools and government policies, but also the CFPB has to make sure it is doing its job to make sure the law is being followed when it comes to lending, when it comes to servicing, when it comes to debt collection. I want to re-engage with the states, with the Department of Education, if confirmed, to make sure that those borrowers are not set more behind. This has implications for an entire generation, but also the issue you raised about the racial wealth gap. It's very, very critical that we get this right.
Well, thank you. I look forward to working with you on this issue. It's my view that our young people should not have to mortgage their future just to have a shot at a future. And it's pressing not only for them, but for our entire economy. In the remaining minutes that I have, in 2013, you testified before this committee and talked about how service members, veterans, and military families were too often the canary in the coal mine, as you put it. And when it came to breakdowns in consumer finance markets, we've seen members of our military in active duty, deployed, literally forced to fly back home from combat zones to save their homes from illegal foreclosures, his own kind of combat. Can you talk about your experience enforcing and expanding consumer protections, especially for our military families, and how you would use the tools and resources at the Bureau to protect military borrowers?
So, Senator, thank you. I've had the honor of testifying before this committee several times before, and I do believe that how institutions treat members of the military can be a canary in the coal mine for others. It is true that military families, they move more, they have more complex situations. It can be tricky. And if institutions are improperly foreclosing on them, throwing them into default, overcharging them, misreporting information on their credit bureaus, it can raise questions about whether they have the processes and the agility to deal with complex situations. I was very proud to work with other agencies on a massive SCRA-related investigation and enforcement action involving a nationwide student loan overcharging scam. We have to make sure we're continuing to work with the Justice Department, with other regulators to crack down on that, especially as we anticipate risks in the mortgage market.
Well, thank you so much, Commissioner Chopra. Our military men and women in uniform are obviously putting it all on the line for us to protect us, and the least we can do is protect them from abusive practices in our financial systems. And I look forward to working with you to do that.
Thank you, Senator Warnock. Senator Tillis for the second round.
Thank you, Mr. Chair. Mr. Chopra, thank you and congratulations on your nomination. I want to go back on, the CFPB is authorized to prevent unfair and deceptive practices. And I think you know that Congress has used these terms deliberately with the backdrop of the FTC president establishing limits on these authorities. I think even former Director Cordray was careful to adhere to the president. But I understand in a Department of Transportation rule to define unfair and deceptive practices, you urged that agency to treat those authorities as significantly broader than the same authorities under the FTC and the CFPB. Should I infer from that you're willing to go further than even Director Cordray did on expanding the CFP authorities?
No, Senator, I think if I understand your question, the Department of Transportation has a different unfairness jurisdiction. The CFPB's unfairness authority, I believe word for word, is harmonized with the FTC Act. I believe in staying within the four corners of the law. I'm happy to answer additional questions about that Department of Transportation comment letter. But it is a different unfairness standard than what exists in the FTC Act or in the Dodd-Frank Act.
Can I infer from that you would at least use rulemaking if you were to go in to clearly define what an abusive practice would be, subject to rulemaking?
So ultimately, we have to enforce the law as written. There have been a number of cases where courts and others have found that the fact patterns meet the prongs in this case, the prohibition on abusive acts and practices. The last director has actually promulgated a rule on short-term lending that specifies certain abusive practices, particularly the repeated debiting of accounts that may lead to overdraft fees. Ultimately, we need to enforce the law, and at times rulemaking can be a tool that's being used. But I take from your question that it's important that it's clear, and we do what we can to make sure that what the law requires is understandable. And ultimately, we have to follow what Congress has written in that statute and be subjected to judicial scrutiny.
Thank you. I just have one other question. Knowing this is the second round, I'll try and be brief, but this relates to a broader issue that I see. I've seen comments from high-ranking officials. I've seen guidances effectively become de facto rules where the industry sees a nod in a certain direction. They feel like they have to really conform to something that's not a rule, which adds a lot of cost, a lot of complexity, a lot of uncertainty. Do you think that it's appropriate that a guidance effectively becomes a rule, or that even a speech or a comment that you could make in an interview could actually drive an entirely new regulatory regimen for the industry?
Well, Senator, I particularly worry about this type of uncertainty for small players, new players. They don't have, a bunch of people working in Washington for them to track all of this. Being as transparent as possible has to be, always a priority. I understand what you're saying, and it's important that that be communicated through all the appropriate channels. That's being said, there is a place, in my view, for the agencies to speak at industry conferences, talk about data and trends, talk about new developments, be able to explain how they might want to think about that. But I understand what you say, and I'm very committed to that transparent communication, particularly as it relates to making sure that small players can compete with larger incumbents.
Thank you, Mr. Chopra. Thank you, Mr. Chair.
Thank you, Senator Till. Senator Menendez for a second round.
Thank you, Mr. Chairman. Mr. Chopra, We are in a midst of a full-blown student debt crisis, with 43 million of our fellow citizens owing $1.5 trillion in student loan debt. And instead of helping provide relief to those borrowers by regulating a student loan market plagued by harmful practices, our country's consumer watchdog was asleep at the wheel, in my perspective, for the last 4 years. I think that student loan debt shakes the very foundations of the American middle class. You know, I can refinance anything in my life except student loan debt. If I was able to do so, for example, there'd be great opportunities to, you know, buy my first home, be an entrepreneur, start a business, have enormous economic ripple effect for the individual as well as for the society as a whole. So, as the lead consumer watchdog, does the CFPB have authority to oversee and supervise that $1.5 trillion worth of consumer debt, including debt owed to the federal government?
Yes, my understanding, the existing law and implementing regulations, those entities, servicers, debt collectors, they are covered as consumer financial products and services.
And do you believe the extent of the current student debt crisis calls for the use of the Bureau's full slate of authorities to ensure that federal and private student loan services are complying with consumer financial protection laws?
Yeah, so Senator, student loans used to actually be more of the exception, and now they're the norm. While I was at the Bureau the last time, the agency reported that student loans had crossed the $1 trillion mark. It's now $1.7 trillion. There was years where more than 1 million Americans were defaulting, even when they had a legal entitlement to loan modifications and income-driven repayment. This has to be something. It's one of the biggest consumer credit markets in our country after mortgages, and we have to make sure that the law is being followed. And I have seen some real improvements over the last decade in the activities of some of these firms, and I hope that that continues, and I hope that there are high levels of compliance with the laws that Congress has passed.
Well, thank you for that. During your tenure as the student loan ombudsman, the CFPB returned over $750 million to wrong student borrowers. That's the type of work I'd like to see the CFPB return to. And then finally, I want to follow up on Senator Warnock's questions to you about the disproportionate impact student loans have on minority communities. I, like him, who grew up poor in a tenement in Union City, first in my family to go to college, would have never done so without the, you know, Pell's, Perkins, and work study. So I'm very familiar and firsthand knowledge of the consequences. But should the Bureau examine whether student loan servicers are violating civil rights laws or engage in other unlawful conduct that disproportionately hurts minority student loan borrowers?
So many of those firms are subject, I believe all of them, to the Equal Credit Opportunity Act. We have seen that it is critical to ensure that there is appropriate enforcement of that law, not just on the origination side, but also as established guidance says, it applies to the other parts of the consumer credit life cycle. We can't really make a mistake when it comes to this. You know, ensuring that our anti-discrimination laws are adhered to is important for the goals that the Congress has set out in those laws.
Well, thank you. I look forward to supporting your nomination to your leadership of the agency upon confirmation. Thank you, Mr. Chairman.
Thank you, Senator Menendez. It's either Senator Lummis, if she's coming back, Senator Haggerty, if he's coming back, or Senator Lummis, if he's coming back, or if she's coming back, or Senator Daines, who has come back. Senator Daines, your second round. Please stick to 5 minutes. Thank you.
Chairman Brown, your ability to handle the juggling here is quite impressive, I will say.
It's not complicated.
It's not an easy task here with our senators here going in and out. I don't envy you. Thank you, Mr. Chairman. These questions here for Mr. Chopra. As you know, following the Supreme Court's decision in the Seal of Law LLC versus CFPB case, the director of the CFPB is removable for any reason and serves at the pleasure of the president. We're now only considering your nomination because the prior director resigned at the request of the president with 3 years left in her term. And regardless of where one stands in the political spectrum, I hope everyone can agree that this instability at the top of an agency with such vast power is frightening. So my question is, do you agree the CFPB should be led by a multi-member commissioner, or commission, I should say, versus one person?
So Senator, it's the job of Congress to determine the appropriate agency structure. Some of our financial regulators are led by a single director, removable by an executive official, the Federal Housing Finance Agency, I believe, the comptroller of the currency. Others are set up as boards or commissions. I currently sit on a commission, a multi-member body. Ultimately, Congress is vested with the authority to establish these structures.
It is. You're exactly right. It's our responsibility, not yours. I'm just curious, is somebody who you say sits on a commission today, who's also, you're very knowledgeable of the CFPB. Just what are your thoughts about? Would it better serve the American people if it was a multi-member commission versus led by one person? I'm curious your opinion, your thoughts.
Well, in my view, regardless if it's a single director or a multi-member commission, there needs to be accountability. There needs to be responsiveness. Some commissions work well. Some single directors work well. And the opposite can be true too. Where I sit at the FTC, this agency has missed some of the worst abuses when it comes to invasions of privacy by big tech, has failed to enforce some of its core orders. I do look at the CFTC under Gary Gensler's leadership that did actually take appropriate actions, was responsive, was transparent. Ultimately, again, this is Congress's decision. But what I'm committed to is no matter what the structure is, we have to follow the law, adhere to the law, be responsive to Congress and the public.
Yeah, no, I think the concern I'm hearing from many out there that we serve the American people is just the fact it can swing wildly between political parties regarding different regulatory philosophies, at the whim of the person at the helm and the president who appoints him. So it's a concern. I just want to raise it, and I've heard that from many of my constituents back home in Montana.
I appreciate that. Oh, sorry.
Yeah, no, anyway, thank you. I'll keep going at a time. So here's a question. Do you believe that business, I came from the private sector, spent most of my career there. Is business a harmful force?
Senator, there's no one more who thinks than me that business is one of the best forces for our lives in America. I am not a lawyer, nor is Mr. Gensler. I studied business. I've worked in the private sector. I believe that business is, frankly, what Thomas Jefferson wanted for a free country. What I do have a problem with is when particularly large actors can bully small businesses or break the law and not be held accountable. At the FTC, we lay the hammer on small businesses. We go after the individuals, we take everything, but sometimes don't do the same, don't treat a larger firm using the same set of scrutiny, even though the law is exactly the same. So I think
right. Would you prejudge in any way a business's actions based on whether you had an unfavorable view of the industry that's part of?
Absolutely not. That is not the job of an agency. The job is to administer the law that the Congress has set. And that would be inappropriate to have, whims or views about particular types of businesses.
So the concern I have is you dissented regularly with astonishing regularity from FTC actions because you complained the penalties weren't punishing enough. So your record of the FTC has, I know, raised some concerns for many on this committee.
Well, Senator,
be brief with your answer, Commissioner, please, as we wrap up.
Senator, I don't believe. Oh, I don't know if the senator has froze. Senator, I don't believe I'm happy to share any of the opinions I've written. I believe that over 93% of decisions were unanimous, but I do have a problem when fraudsters are, get off with not having to redress their victims. We are sometimes not doing enough to hold businesses accountable when it comes to the harm that they cause, even when it is an outright violation of the law. I certainly objected to the FTC's Facebook settlement, which was subject to, in my view, not even fixing the core problem that led to the massive violations. And Senator, I'm happy to talk to discuss that more with you. But ultimately, we want honest business to be able to thrive and to compete, and for bad actors to be held accountable when they commit fraud.
The time has expired. Thank you,
Yep,
Senator.
thanks.
Senator Lummis for 5 minutes. I think you're last. Go for it.
Thank you, Mr. Chairman. Hello, Mr. Chopra. It's nice to see you again. My first question is about usury laws. They've historically been the province of state legislatures. My state of Wyoming even has a usury cap. I, in fact, remember the debate because I was a state legislator at the time. Dodd-Frank prohibits the CFPB from imposing maximum interest charges on consumer credit. Do you agree that the CFPB lacks the authority to impose a usury cap?
So, Senator, my understanding is that you're right, that usury caps, interest rate caps, that is primarily the provenance of states. And I believe there's some explicit language in Title 10 of Dodd-Frank that prohibits the CFPB from establishing something like that. I'm happy to look at it more closely if there are more specific questions, but that is my understanding of the law.
Nope, great answer. That's fabulous. Thank you. Now, if confirmed, you will have the honor of being a member of the FDIC board. And Congress has specified that industrial lending companies are entitled to deposit insurance if they have a safe and sound plan of operation. This is the easiest question you'll be asked today. Will you consider the individual merits of each and every application and grant deposit insurance to an ILC with a safe and sound plan of operation?
Yes, I will follow the law when it comes to applications. I will, of course, rely heavily on the FDIC staff. That's their real expertise, but in as much that applications are subject to these laws and regulations, of course, that should be the standard by which they're evaluated by.
Thank you. And my last question, Chairwoman McWilliams was confirmed by the Senate to set the direction of the FDIC. Section 6B of the FDIC bylaws allows 2 members of the FDIC board to call a special meeting of the board. Since you will not be the chairperson of the FDIC board, will you commit not to force votes on matters the FDIC chairwoman has not included on the board's agenda?
So, Senator, I'm actually not familiar with these rules of procedure, but I'm happy to take questions for the record on that. Is the question that the chairwoman has a statutory right to call meetings, or, and I apologize if I'm not fully understanding all of it, but I'm happy to take a close look.
Okay, it's a bylaws thing, and you bet I will submit questions for the record. And thank you very much for your time.
Senator. And thank you for
all I have. I get to yield back almost 2 minutes.
Thank you, Senator Lummis. Is Senator Hagerty here? I assume not. So we are drawing to a close. I think he's not. Thank you. Well, thank you to Mr. Gensler and Commissioner Chopra for being here today and providing testimony. The longest committee meeting I remember in the Senate Banking, Housing, and Urban Affairs Committee, with the interest from so many members in second rounds. For senators who wish to submit questions, for the record, these questions are due by the close of business this coming Friday, March 5th. For our witnesses, please submit your responses to questions for the record by noon on Monday, March 8th. We obviously want to move on nominations quickly, is the reason for the squeeze time.